Morning all. How are we all doing? Morning outro. Morning Big Papa. How is everybody this lovely Friday? Last day of the week. Hopefully we get some movement today. We've had no movement on anything this week, so fingers crossed stuff might start to move this week. You never know. Stranger things have happened. Morning Diamond. So just have a quick look at the news for today. There's not a lot today. We've had the UADA talking overnight. We've got PCE at 1:30 this afternoon. So there's potential volatility for the US dollar. I wouldn't expect this to do an awful lot either way, really. But stranger things have happened. But just keep an eye on it, basically. So this is the goods and services purchased by consumers, excluding food and energy. So it's a little bit like CPI, but dumbed down version, really. It explains it there anyway. It differs from core CPI, blah, 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 blah. But it is a leading indicator, so we need to pay attention to it. Morning, Jacob. So that's the only news we've got today. We've got obviously other bits, new home sales, University of Michigan, etc. And it's still G20. G20 has been extended to Saturday. Or was that? No, always going to be on Saturday. Was there day 4? I thought there was only 3. Maybe not. So we still got G20 stuff. There's a lot of sanctions coming out of G20 meetings. They're putting an awful lot more sanctions on Russia, and some of the main sanctions that they're now implying are on export of technology for military equipment specifically. So basically, they're strangling Russia's ability to manufacture any of its war machine. So this is kind of a step up in sanctions. It's all obviously coming out and being drip fed out, but quite difficult for Russia. But obviously you've got China sitting behind them at the moment, which will not be on this export ban necessarily. So not sure if it's going to have any impact, but there's nothing coming out of G20 that's really affecting the financial markets that I can see. So that's all we got this afternoon, PCE, and obviously we've had UADA speaking. Nothing really came out of that speech. German GDP we've just had 0.4. Oh, that's positive. That's good. I wonder if we had a pump on the euro. It looks like we have. Well, DAX is coming down anyway. No. Oops, wrong one. Nothing much. So that's good. GDP up. That's positive euro. But yeah, the end stuff. I was just skim reading through all of this. I was just looking for anything related to FX, and he didn't really say anything much about FX. The only thing that really came out is if the 2% target is fulfilled, they will cease significant bond purchases, which will bump up the yen. So read into that the opposite. We will continue to bump up the yen until we get to the 2%. And the other thing that he said, there was something else that was said that I honed in on as well. Additional time to achieve. There was something about when they're going to release the negative 0.1 rate on interest rates, and that will massively boost the yen. It was 2024 is the most likely. So where is it gone? It wasn't red news, which I found pretty odd, because that's the thing that we're interested in, is the interest rates. But basically what they were saying was, oh, here we go. No, is that it? No. Unwinding easing policy. It was around here somewhere. Anyway, what they were saying was, here we go. There it is. Experts believe the Bank of Japan's negative interest rates will stop in 2023. Right. So that's 5 out of 27 experts, whoever these experts are, believe that the interest rates will stop in 2023. So just read into that. There's a small number of people who think that they're going to increase interest rates. So basically, the majority of people in the industry think the 0.1 interest rate on Japan will stay as it is for the entire year. 12 believe it will end in 2024. So roughly half of them are saying next year they'll probably start to ease the interest rates, and 10 believe it will be 2025. So what we should really read into that is that this negative interest rate that we've got on the yen, which has been in place since forever, years we're talking here, the interest rate on the yen is negative 0.1, always a negative. That's going to stay the same this year, which means it's bearish yen. Yeah, so so that isn't going to change. So that's the only news we've had overnight, really, that's important. And obviously that GDP figure's just come in. So there you go. So there's the news. Watching the Dow this morning. Sorry, no, I'm not. I'm watching the DAX this morning. Trading the opening range breakout on the DAX. Jacob, morning, said that. John, ladder, outro, euros selling off quite heavy pre-market. Is it? Depends what you call pre-market. There isn't really an open to the FX market. It's 24/7. Pound is strong. Strong pound at the moment. So looking at the yens quickly while we're waiting for the DAX to open in 1 minute, in 12 seconds. In 5, 4. Let's do a countdown. It's just better open. So there's your pre-market opening range if you're trading the pre-market. God, I milked it yesterday on that NASDAQ. I put a post in the Telegram group. I had to post that in the Telegram group. My ORB on the NASDAQ, I've basically made my 5K for this month off of the ORB in 2 days. Awesome. So just waiting now. Got to wait 10 days. Oh, no, 6. How long have we got left on that one? 6 days till payday on that account. Draw out 5K. Very much. Well, actually 80% of it, not all of it, obviously. But so yeah, actually milked it yesterday. Caught that short. That was a lovely short yesterday. Anyway, diversifying. So looking at the yen pairs. So this is when Ueda. I'm going to be saying Kuroda because I've been saying Kuroda for years. I'm going to keep saying Kuroda, even though he's not involved anymore. Well, he still is, but he won't be. Ueda, basically, that's all we got out of that speech was a whipsaw. So there's nothing, they didn't make any moves really. Typical double-ended stop hunt, just taking the liquidity from everybody from there yesterday and everybody that entered Asia this morning, all dead. And basically back to exactly where we started. So no movement off of the yen, unfortunately. I was expecting to hoping to get a little bit of strength off of it, but we didn't really. CAD yen's not come down. Oh my God, this charting platform is awful. I don't know what's wrong with it. I think it's this MT4. I might have to just reinstall this MT4. None of my other MT4s on Robo are having this problem, but this one keeps freezing the data for some reason. I don't know why. So that's really all we got with the ends. Just a whipsaw. No movement, no strength. I was hoping he was going to rally the yen a little bit, but he didn't. So no further forward there. Pound is really on a mission this morning. Should get an ADR on the pound this morning, I reckon. So DAX, the pre-market is a whipsaw this morning, short and long, currently long. Just looking at where we're going and what we did yesterday on the DAX. So yesterday's move was shocking, basically. All we got yesterday at the open, as we saw, was we got that rally and then we came back to where we started. New York pushed down and pushed back up again. So we have made a bull bar yesterday, same as the day before, just. That was more of a that yesterday. Yeah, so today's target basically is going to be yesterday's high and yesterday's low. We're bang in the middle of the two. So it could go either way today, depending on which way we want to go for liquidity. Could go both, obviously. So, but we'll see. Certainly looks a little bit bullish on the initial cash balance. So we've still got a couple of minutes left for that to run in. But yeah, tight range today. Tight range to trade within because we had a very small day yesterday, sideways. Coming in late, not sure if you saw GFX, probably behind GBP strength. Not sure if I saw GFX. GFK. What's that? Don't know what that is. Probably behind the pound strength. What's happened? Have I missed something news-wise? There's nothing in here about the pound. I don't quite know why the pound's so strong this morning, but explain, John. Euro pound, huge sell-off. Yeah. So that's just pound strength at the moment, but it's only two candles. Well, two candles. We're talking about. I was on M30. What am I looking at M30 for? I should take that off my chart. I never look at M30. So we're just trying to get a reversal on the euro pound at the minute. GFK consumer confidence. Don't even know what that is. Never heard of it. Oh, that's German. Yeah, German GFK consumer sentiment. That's got nothing to do with the pound. Yeah, that's got nothing to do with the pound, does it? That's positive GDP figures as well. But that'll affect the euro, won't affect the pound. Okay, so if I'm long on the DAX, if you're on the 15-minute pre, you've got a short stop out and a long. I would imagine that's already TP'd if you're 1.5 hour. I should draw these on, shouldn't I, really? I should really have the EA running in here because I'm just showing you the account that the EA is running on, but I should really draw the lines in, and then we know what the hell we're talking about, don't we? I should run the EA on here, shouldn't I, with the set file, but tell it not to take trades. So your 1.5 hour on that stop will be just under there somewhere, 128. Yeah, so you've TP'd. There's almost a 2-to-1 there. Long, lovely. So one stop out, one TP, and if we can get a runner, lovely. So there's your 5-minute opening range. So I've gone long on the 5. It was UK hang on, I'll send link. But I mean, I don't know what that news is, but it's not important news, whatever it is. I've never heard of GFK, and it's not on the radar. Look. But yeah, I mean, let's have a look. It'll be yellow news, I guess. GFK consumer confidence. That was at midnight, though. That was ages ago. If that was going to affect the pound, it would have gone by now. That thing, whatever it is. Minus 38. Yeah, don't read too much into consumer confidence. What do we know? This is the same thing with the University of Michigan, yeah? It's the same sort of news as UOM. Where the hell am I? Why have I got so much news? What's going on? Canada. It's the same as University of Michigan, yeah? What the hell do 200 students know about consumer confidence? You ask me, I'll say I'm confident. Why am I confident? Because I've got over 50k sitting in my bank account and I haven't got to worry about stuff. You ask somebody living in a council flat, they're going to have a completely different view of consumer confidence. It's not something that affects the market, which is why it's orange news and it's not really paid attention to. So I wouldn't really pay too much into that. The pound will be rallying for some other reason. And if it was going to rally, it would have rallied when the news came out, obviously. Just pulling back on the DAX. Who is GFK anyway? I'm intrigued to know who they are. I've never really heard of them. I don't, obviously, because it's not red news, never paying attention. GFK. Level of diffusion index, monthly, financial confidence, so it's GFK. Growth from knowledge. One of those companies you never really know what the hell they do. There's just so much stuff they do. Lots of companies out there like that, aren't there? Like all the most rich people in the world run these companies, and you've never heard of them. But actually, what they do is they manufacture and design everything for Apple, but you never hear of them. It's like there's these huge organizations with multi-billionaires running them, and they just stay off the radar because all they do is supply manufacturers. And I learned a lot about supply chains in when I was trading stocks, because one of the things we focused on in stock trading was when the share price of a NASDAQ stock is having earnings, the best thing to focus on is not the NASDAQ stock. The best thing to focus on is the suppliers of the NASDAQ stock. So if, for example, Apple's share price suddenly jumped on the announcements of the iPhone 7000, you don't buy Apple. You buy the manufacturers that supply Apple with the components, because their stock price is going to have less liquidity in it, and you make way more money out of the people in the supply chain below the big manufacturers. It's very interesting when you actually get into how actually, and this is what I say all the time in here when I'm talking about the stock with the indexes, making sector purchases is actually more profitable than actually making stock purchases a lot of the time. Because if you buy, when Apple has got a new product coming out, if you buy the electronics sector as a general, like semiconductor manufacturing sector, their stock price shoots way more percentage than Apple's will. Because Apple's now got to design, develop, market, and actually sell the thing. Whereas these guys, doesn't matter what Apple do, whether it's a failure or a success, whatever their new product is, the manufacturers are still going to manufacture their products and sell them. So it's actually better to concentrate on the not the pink sheets, but the smaller stocks. The Russell 2000s, those stocks in the Russell 2000 are way more liquid. Well, not way more liquid, but way more volatile. Anyway, I'm not talking about stocks. Right, so DAX has just pulled back. Still sitting within the initial 5-minute open. So we'll come back to that in a minute. Morning, Luke. Right, so have a look at the ADRs. So there's nothing on ADR today to look at, all flat as a pancake. Weeklies, Aussie, New Zealand. So this one we've been looking at for potential shorts for a while, and it's come down beautifully. It's coming down into this area that I'm interested in potentially taking a buy from, but it's kind of running out of steam down here. So we had this area here, which we double bottomed, triple bottomed, and then slammed. So remember I said yesterday I'd be interested in buying it here because I think we've got a third knock on the door, which we've done. This is the area really, I think, now we've made this huge move, we're going to pull back from. So I'm hoping we're going to get down into there, and I'd be looking for a buy opportunity down there. Either H4 extension, which we've got already at the moment, or hourly. But you could get into this now, really, because you've got this whacking great zone of support down here. So if you get in now and it just decides to pop back up to there, that's a nice, easy trade. And you can add to it on the way down. Drop down M5. You've just had a reversal out on that one this morning, actually. So ignore that candle. That's a broker candle. So this is the actual low of the day so far, regardless of that. And that's just been taken as well. So that's pretty good. For a weekly, it is Friday. So, bear in mind, you're taking a trade based on the average weekly range being exceeded on the Friday, basically. And if it just goes sideways today on Monday, your reason for the trade is gone, isn't it? So be a bit careful on Fridays. Pound odd is the other extension to the downside. To the upside. Looking for this sell back down into the propulsion. So they've just taken liquidity at yesterday's high. Potentially looking for a drop there. That's all reversing. They've enticed a load of longs in, haven't they? Everybody's suddenly gone long on the pound. What they're actually doing is taking that liquidity. So I'll be looking for that drop back down into that propulsion. I think I've got some pound shorts on, actually. Yeah, I'm short pound New Zealand on an ADR at the moment. I'm short pound Swiss as well. So yeah, I like all these shorts still, all the pounds. So pound odd, that obviously hit early on this. What am I doing? Odd. Pound odd hit early on this week. So we had the hit on that on Tuesday. On Wednesday. So that was our entry, wasn't it? On Wednesday, we were looking to get in. Actually, we looked to get in on this one on Tuesday. Sorry, yeah. So we were looking to get in on the ADR. A lot of people, I think, got in there, didn't they? On that ADR reversal, looking for the propulsion move, and it pushed up the next day. So we got that propulsion filled on Thursday. So all your entries would have been in there. If you hadn't taken the ADR reversal on the Tuesday, you would have got in there. And obviously at the moment we're just hovering. So that's all we got on the ADRs. The RSIs. By the way, I've just had to double all my drugs today. So if I start talking gibberish this afternoon, it's probably not going to affect me so much this morning because I've only just taken them. But I've basically doubled the dose of the medication that I'm on for my arm. So we'll see. This afternoon might be quite interesting once it's kicked in. It makes you drowsy, and it makes you do all sorts of other things. I went through the list of side effects yesterday with my wife because we went out last night with my brother-in-law for a drink. Not for a drink, but for a meal. Because I'm not meant to drink on obviously these. But so I went through the list of side effects basically when we were reading the leaflet, and I've got half of them. One of them is verbal diarrhea. Right, US dollar Swiss is the only thing we've got extended on the 4-hour and the hourly. Pushing up nicely. US dollar is strong. I really think we've got a pullback coming on the US dollar though, so I wouldn't be too worried about taking a short on this. It's a very nice, orderly climb up the stairs, basically. It's only going to take one negative news event to drop this. I'm not double dosing for fun. I'm double dosing because the doctors told me to double dose. I had to go on it for a week and then double it after a week. So I'm not doing it just for fun. So yeah, extended on the hourly. We are also extended on the 4-hour. It's not very heavily extended. It's just about to light up the 75 actually. So we are up here now, on the 4-hour. Yeah, so as long as this sustains this move when the next 4-hour candle closes, you're going to get an alert here for a 4-hour RSI extension at 75. So I think it's got it needs a pullback, basically, the US dollar. So, look at it and the way that it's moving against most things at the moment. It is very orderly at the moment. So, when I see extended, we're going to get a pullback of some description. We've got a really nice resistance coming up here. So we've got that level there, and depending on how you want to draw your resistance, you could use that high as well. Whoops. Yeah, there's lots of different ways to draw support resistance, but that zone there is where I would say we are probably going to start a rest from. How far that's going to be, I don't know. We've got this high here, obviously, to consider. We've got this propulsion gap, which is untested on the 4-hour to consider as well. So there's a good, I reckon, half an ADR to an ADR drop due on the US dollar Swiss. So that's extended on the 4 hour and the hourly. So drop down to M15. I'm in this, I think. Yeah, I'm short on this already. So yeah, I'm ready for a drop on the US dollar. It's going to need a little bit of a rest. I'm still bullish on it, but I think short term this is coming down. Yeah, so some kind of pullback. That was a tiny one from there, and we got a sort of half an ADR from there, half an ADR from there. So I'm not getting greedy on it. Once we do start the pullback, not going to hold it forever because I'm long the US dollar. But I think this is due a little bit of a rest now. So looking good in a nice area. If you want to be super tight on it, when we get to ADR today, that's when you're entering this area here. This is more likely where the limit orders are going to be and where they're going to trigger. So 100 to 125 ADR today. If the news with the PCE this afternoon is bullish, we'll probably get a rally. If you look at the PCE, it's always good to look at historical on it. With certain news events, you will find that they often come out better than expected, and others are very mixed, and others are often worse than expected. With the PCE, you don't get that many times when it comes out better than expected. Yeah. So you look at those are the better than expected. The rest of these are as expected or negatives. So it's more likely that we will get a 0.4 or a 0.3 than it is we're going to get a 0.5, which you would suggest is, as the market is extended on the US dollar, they're more likely to start some kind of pullback than rally. If it comes out massively green, you're going to run straight into resistance, which is likely going to drop from. So either way, there's a drop coming. But how big, obviously, we don't know. So I'm already in it on the 4 hour extension. We had an M15 reversal. We had an M5 reversal yesterday, which I got into there. So I'm in from here at the moment. I'm in a bit of drawdown on it in a minute, but look at that. Having a nice little reaction at the highs there. So yeah, look good. Apart from that, there's nothing else to look at on there. DAX has gone short. So I stopped out my long and I'm short. Big Papa, I missed your question. Question about the Bank of Japan. I'm not good at fundamentals and confused. Bank of Japan is intervening to not let the yen weaken. Yes. If I'm not mistaken, Bank of Japan used to intervene to want the yen weak. Why the shift? Basically, the Bank of Japan the economy in Japan is not doing well. COVID killed it, basically. Obviously, Japan's a very small country. They rely on mainly electronics manufacturing. And while the COVID lockdowns were happening, we basically stopped buying everything. We couldn't go out. We couldn't do anything. So you remember I had that problem with Tesla. Yeah, you couldn't get the I can't remember which chip it was, but there were certain chips that you couldn't get for Teslas and other cars because there was basically a huge backlog everywhere. Everybody stopped working. Everything went ground to a halt. So basically, Japan's economy tanked dramatically for 6 months. They've never got out of it. And they got out of lockdown badly as well. So they've had negative interest rates at the time because they weren't doing particularly well. So what they want to do is make themselves more, they want to keep on top of inflation, basically. But to do that, you've got to balance your finances very, very, very carefully. Everybody's having exactly the same problem at the moment. But the difference with Japan is the interest rates. They never increase their interest rates. That isn't the way they deal with things like the rest of the world. Just because their way of living, their economy, everything's different over there. So they are happy for their currency to weaken to a certain point, but it gets to a point where their currency becomes so weak, they have to do something about it. And they just end up buying, and they pump their currency. So what we have found is over the last couple of months, actually last 6 months, really, when it was the trigger for this was the US dollar 150. Yeah. So when we got to 150 on the US dollar, what we saw was as we were approaching this, we saw a massive move on the yen, and everyone was like, whoa, that came out of nowhere. And Japan said, no, it wasn't nothing to do with us, nothing to do with us. And everyone went quiet. And it's like, right, okay. Well, how else did that happen? And then basically, as soon as we hit that 150, literally, as we hit that 150 mark, they intervened and they bought tons and tons and tons and tons of yen, and they sold loads of bonds, everything. They just made sure the yen was pumped to death. And as soon as they did that, the market was like, right, okay, they've got the power to do this over and over again. Bang, bang, bang. And that's all we've had since we got up there. So it's just their way of dealing with things, basically. And it's not the way that we do it everywhere else. The Swiss franc does this actually occasionally, but it's just what the yen does. So it's notorious for doing it. It's done it for decades. So when you get these periods of intervention, me personally, I just want to be shorting it, really. Although, it takes a lot for them to do it. It's not good for their economy to do this. It's kind of like us in the UK, we just borrow money. In the US, they just print more money. Yeah. All this stuff is actually bad for everything in your economy. However, you get to a point where it just has to be done. You don't have to understand. I don't fully understand all of the workings of all of it. You don't need to. You just need to understand that it happens. So when we are in a phase of them doing this, you've just got to be aware that, when you're rallying and when you get extensions, those are good to take, because the further this gets to wherever they're not happy with it, the more they'll just tap it on the head and just go, pop, no, you're not coming up. That sort of stuff. That's what the yen does. So, but equally, you can buy this for ages. Look, nothing wrong buying it. It will go with the fundamentals. Yeah, the fundamentals at the moment are bullish and bearish, right? So it will go in that direction, but at some point they will go no more. And we're getting to a point now, look, with all these yen pairs where we are literally just going sideways. They've put the brakes on. Doesn't matter what your currency's doing. They are basically holding the yen in place, not letting it go higher. So it tells me that I do not want to really be buying this thing at the minute. Short term, no problem. But if you're going to get into a position, you're better off selling it. But that flies against the buyer scorecard. And this is why I keep saying, with the buyer scorecard, you have to take this with a pinch of salt. Because the interest rates, that is the reason the buyer scorecard looks like you should be buying everything against the yen, because everything has a positive divergence, a positive, what's my word? Differential. I had to look it up then. What's it? A positive differential against interest rates and interest rate change. So everything is a +2 against the yen. So these figures are a little bit out of whack. You need to just be aware of it. But most of it is range bound. COT as well. The COT positioning on the yen is I'm not sure 100% sure on it. We're going to get new COT figures coming through this evening, or rather tomorrow morning. So I'll be interested to see what those COT figures have changed to. But I would focus more on what retail is doing at the moment and the rest of the fundamentals. It's almost worth taking these out of the equation, except I haven't really got the facility to do that in my systems. I can't do it. But yeah, anyway, that's what's happening with them. But in interim, short term, it will go either way. But I say I would be more short than long on it. DAX is just rejecting down at the lows at the minute. Is this going to be one of those days? It's going to draw those levels on. Let's see where we are on it. So there's your highs and lows. There's obviously a 15-minute opening range. quite big. So any opening range breakout has got very, very short distance to go. You're only ever going to get a 1-to-1, even less than that, before you're going to hit some kind of resistance or support today. So we have got the gap from yesterday, which remains unfilled on the DAX. So more reason to be bearish than bullish. These usually get filled within a few days most of the time. So I'm more biased short at the moment, just purely on that. Right, so let's look at the sentiment for today. Retail. There's still quite a few longs and shorts. They are scaling out of these. These have been sitting in the mid to high 90s for a good week now, these Swissies. They are starting to liquidate. So there's a few, they're all still obviously good sells. Aussie Swiss, CAD Swiss, still good sells. US dollar CAD, still a good buy. But they are starting to scale out of them a little bit. I think people are getting, we've been rallying on the US dollar for quite a while now. So I think everybody's ready for a little bit of a breather on it. So with these, the top buys and sells at the moment, in line with COT, which again, COT, we've got to take into account a little bit at the moment that we've got the wrong data. Just going to see what CFTC's latest announcement is. Oh, here we go. Following the ION cyber-related incident reporting firms. Right, so CFTC staff intends to resume publishing of the COT report as early as Friday 24th. So that is today. So we are going to get a new COT report today. They will begin with the COT report that was originally scheduled to be published February 3rd. So they're starting with the oldest first. Well, that's useful, isn't it? We really want to know what we are, why don't you give us the up-to-date figures? Why don't you start with those? Intends to sequentially issue missed COT reports in an expedited manner, subject to reporting firms submitted accurate and complete data. Pending and timely, accurate and complete submission of the backlogged data by reporting firms. Can't get to the point. Missed the COT report published by mid-March. Oh my God. Okay, so that's not good, is it? Right, so we're going to be... So the COT data basically is going to be out of whack. Last one we had was the 27th of, I think it was 27th, 24th of January, something like that. So we're going to be out of whack with COT data until mid-March, so another 3 weeks, basically. So as the trouble with when we left the COT data, we were teetering on the edge of being really extended on some of these. This 65% long on the US dollar could now be 75, 80 for all we know. No clue. It could have dropped back down to 50, and we could be looking at a pullback on a short for the US. We've got no idea. So got to take this with a pinch of salt. So what I would do probably with the sentiment at the moment is kind of forget these and concentrate just on the retail plus and minus twos, which are the strongest at the moment. So US dollar CAD longs, it's already gone this morning, you've missed it. Euro pound shorts, so basically you can wait for pullbacks on this. So they're coming for this liquidity basically. Euro pound shorts, we've missed it. So again, they're coming for this liquidity down here. CAD Swiss and Odd Swiss shorts. That's already coming down, so they're heading down to here. Or deeper. And CAD Swiss. So CAD Swiss, there's a good opportunity to get into that. So this is the one we've been looking at that I've been waiting to get back up into this zone. So want to be looking for shorts on this. I mean, they've just taken out the Asian high. So this could be it. So have we just had a reverse alert on that? We structure break. Yeah, so we just had a structure break after taking the Asian highs. Yeah, so potentially getting on the retest of this, or pending under the low if you wanted to, and assume that they're going to come down for that, and probably that, which is yesterday's low. So there's a good drop down to yesterday's low, and that's well within an ADR. Look, yesterday's, it's actually just about in ADR. So we could get a hit to the downside on this one this afternoon. However, there is a good amount of liquidity. See, I've got that little alert set there. There's a good amount of liquidity sitting there. So we've got this range at the minute that we're sitting within. So this area up here and this area here, which is kind of within the highs of that range. So it's a contracting range, basically. So we're either going to go down from here, which means we're going to put in a low, a lower low, and another lower low. And then we're going to put in the new, lower high, a lower high, and a lower high. And then a lower low, a lower low, or lower low there, and then a lower low. So market structure, basically, just looking for a short, aren't we, really? So we could come up into there where we're probably going to find a load of limit orders triggering, which is well within an ADR. The interesting thing is, within an ADR to 125 ADR today is all of these highs as well. So your decision is, do you want to jump on board now, or do you want to wait? But either way, I'd be looking to get in short. If you're going to position trade this, which you can do very easily with the sentiment, obviously, you could get in now on that M5 reversal alert and then just add. I would probably add up at ADR. So it will either hit that and it will drop. But what you don't want to do is necessarily wait for it to go to there, because if it's going to put in a lower high, it's not going to go there, is it? It's just going to come down from here. So up to you how you want to get in on that one, but like that as a short. So yeah, so that's your that's the only plus and minus twos. Obviously, there are weaker ones to look at as well that are in line with COT. So Aussie, all the Aussie pairs. So Aussie US, Aussie New Zealand, and Pound New Zealand. Aussie US is coming down hard already. Aussie New Zealand, we know, has been coming down very nicely for the last couple of days. And Pound New Zealand, so that might be a good opportunity short. So Pound New Zealand, you can take the reverse alert short on that one. So you've got COT by a short as far as we know. And again, don't know. It's difficult, isn't it, with a pound? The pound, 63% of the market was short. What if this is now only 50%? Should we have a short bias on the pound even? You can't really tell, can you? This is the first time I can remember we've ever been behind on COT data. We've had the odd week where we've missed, and we obviously get delayed on bank holidays, but this is the first time we've had, we're going to get to the point where we're nearly a month behind on COT data. We've got no idea what the market positioning is whatsoever at the minute. So a bit worrying. But Pound New Zealand, you've got obvious highs here at yesterday's high. So for example, the sentiment EA would be looking to take a short there. So that would be a lovely entry if they take the liquidity from that double top. They love enticing double tops. Yeah, there's always twice as much money sitting there because everybody that got in there is in. Everybody that got in there because they missed that is in. So there's way more liquidity sitting at yesterday's high than normal. Big target to aim for, and then they'll collapse it. Yeah, so that's a good looking short. It's a bit weak. New Zealand, US, they're all a bit weak. The other long potentials in line with COT are the euros and these ones against the yens. So euro yen and US yen. Again, we know they've been pushing, but they're all stuck at the moment. So I'll be a bit worried about taking longs on those at the present. But Euro odd and New Zealand CAD. Euro odd's going long up into that resistance. And Euro CAD. So Euro CAD looks pretty good. M15. We just come up to the highs at the moment. Got that big propulsion gap as well. Although that did not break that low, so that's not a great propulsion gap. That's not part of an accumulation. That's part of an A-shaped move. So there is a lot of sellers obviously in there. We know that. So we might find that liquidity comes down from there. But yeah, there's your sentiment plays. DAX looks like it wants to come down, which is good. Anybody got any other pairs they want to look at? I'm also going to cover gold and oil this morning because I didn't look at those yesterday because we started waffling about other stuff, about prop firm stuff and everything. Gold is coming down hard. I say hard, actually, it's not coming down hard. Not strictly true. It is coming down. This is a really good example of a squeeze. We were talking yesterday about, there was somebody in here yesterday that has just done the boot camp and is just starting to do position trading. This is a good example of a squeeze. So if we take this section here from when this, let's take it from there really. So why do I never look at the Dixie chart? Because I don't need to. What use is the Dixie for me? I don't have any use for the dollar index chart. It doesn't help me. So if you got into a long position there, for example, not that you would for any reason, but not with my strategies anyway, but if let's say you were long, what this has done is obviously we had a fundamental shift. We had FOMC pumping really hard on the dollar, and then we had the unemployment figures coming out as way better than expected. So this is the type of thing that you'll get stuck in, a fundamental squeeze. Morning, Stevie. So fundamental shifts happen basically when there is something changing in the fundamentals of a currency which suddenly flips it from a long to a short. This sort of stuff. So we've had a fairly weak US dollar. So we've had good news coming out and it's still not rallied. We've had bad news coming out and it's collapsed. And all of a sudden the Fed came out and went, nope, this is all looking fantastic, everybody. Look at the unemployment figures. And everyone's gone, wow, buy the dollar. So if you were accidentally longing it at that time, you're stuck in a squeeze. And what a squeeze, the reason squeeze get hold of you and don't let go when you're position trading is when you're entering into positions half an ADR to an ADR apart, what you are waiting for is a profit take move that takes you back roughly half an ADR to an ADR to get you out of some of these positions. And as you can see, this is a typical squeeze where what we do is we do nothing but sideways drop, nothing but sideways grinding down, drop, nothing but sideways drop. Little bit of a pop, sideways, grinding, grinding, grinding. So this is the definition of what a squeeze looks like. It's basically just gradually moving against you for weeks on end. So you don't get your P&L going hideously badly into drawdown, but what happens is it just gets a little bit bigger and bigger and bigger and bigger every day. And there's nothing you can do about these positions. So you have to make your mind up as to when you're in a squeeze, as to when you get out of that squeeze and how you get out of it. Personally, I hold it as long as I possibly can because you know even when this is happening that the market at some point is going to have a reversal. And it's usually on a news event. You can't have positive news forever. There will be a negative news event that comes out. And that is where the market will suddenly make a move. But what the market is doing when they do this is enticing everybody in long. And then they tend to carry on with the current direction of the market. That's all you need. Yeah, let them entice the longs in. You get out there. And in fact, then you can flip short, can't you? You can go the proper way. So what you were doing is obviously buying up the RSI extensions, wouldn't you? And it's just the wrong thing to do because the fundamentals have shifted. But that's a good example of it. And obviously you can use aggressive drawdown control. But I mean, in this case, every aggressive drawdown control position you took would have broken even or become a loss. Yeah. And you just have to scale out of it. That's all we have to do. And obviously that's why we bank profit every day. The whole purpose of building your P&L like this is so that if I get into a squeeze, I can use this to offset that drawdown as and when I need to. Yeah. So yeah, looking at gold, obviously the reason gold is coming down is obviously because of the US dollar strength. But gold has its own entity. So longer term, obviously what we've had is this big rally for the last sort of 5 months or so. We've been pushing on this. And now we've had this shift where we've actually got a bit of strength coming through in the US dollar. So that's the sort of movement I would be looking for on it. But it's very, very difficult to trade anyway at the moment. You're not having any real opportunities to jump in short on this because it's not giving any pullbacks. So, if I was trading gold, I would be looking for RSI extensions to the upside on the hourly or ADR hits to the upside. You haven't had one since we haven't had one this month. So there's literally been no entry because it's been such a tight little squeeze. So, however, we are starting now, as you can see, to bottom out. So we've just about made a new low yesterday, but it's the first low we've made for an entire week. So gold has stopped its drop as it did with that flag there after the initial move. And then basically all we've done is we've flagged and broken. Now we're kind of in an accumulation, but it looks like it's got a little bit more strength on it now, or rather a little bit more weakness in the US. So this PCE this afternoon is quite key, because if we do get an as expected or negative on it, I think there's a good chance that we might see a little bit of weakness creeping in the US dollar for a while. And we might have a week of pullback, coming up. So difficult gold. I don't trade it, obviously, because it's just not suited for position trading. But yeah, that's my take on it. I don't really have a take on it. Oil. That was an absolute beauty. I should have taken it. I was just didn't want to take it because of the speed. But I said, didn't I? It's not going to break this low. It can't break this low because that invalidates what we're waiting for, which is the pump. And it got so close. This, I think, is probably where we are going to start our run on the highs. If for any reason we can't get this bull market started, and we are going to go into some kind of sideways movement for a while, think symmetrical triangle pattern from here and look at where potentially we're going to get to. Yeah, that is your worst case scenario. That is what I would hope and expect for either that or that. So either way, I think you've got a good rally up 100, 125 ADR today. Not today necessarily, but in the coming days up into this area. That is assuming we're going to put in a lower high. So I think gold's a good buy, but it was yesterday really, or the day before actually. It was overnight really. It was in Asia, wasn't it? The reversal alert. But yesterday when we broke the highs of Asia, pulled back and pushed, that was kind of the sign to go long on it. But yeah, missed it. Again, I'm a little bit worried about oil. It's a new instrument to me. I've only been trading it less than a year, and I still haven't quite got a handle on it. Big Papa, if we got squeezed, that means we missed out on the trend move. Well, of course you would, yeah, but you're not a trend trader. Well, depending, I don't know. I'm not a trend trader, so I don't miss out on trends because I don't enter trends. Every trend comes to an end. Yeah. So if you want to get into trends, you need to become a breakout trader. Position trading is not for trend. My whole premise of my entire strategy is counter trend. I'm not a trend trader. I don't hold. Trend traders hold positions. Trend traders have a 30% strike rate, and they get in and they hold for a long time. That's not me. I'm in and out. I can't hold for. I can't hold. I haven't got the psychology personally to get in here and go, oh my God, look at the 12 grand in profit. Oh my God, I've only got 3 of it left. I can't deal with that. I want to be in, I want to be out, I want to have it in my bank account. You can trade in, I 100% trade in line with the trend, yes, but not with oil. That's a bad example. But look at US dollar. Yeah. You needed to be shorting this every pop, basically, for the last year. Not now. Fundamentals have shifted on the US dollar. So now we're entering into green territory on the moving averages. We're starting to push up. So we want to be doing that. But if you want to be a trend trader, next reverse alert on the 4-hour chart or the hourly chart after a pullback, get in and just hold it. Yeah. I just can't do it. That's not for me. The longer the squeeze lasts, the more important it is to get into it when it does go your way. Yeah, exactly. If you're scaling in with consistent lot sizes, the average is getting further and further away. Yeah. So that's the whole thing with position trading is, you know, when you get a squeeze, what your job is to keep your average within an ADR. If it's a nice organized squeeze that goes like that and just doesn't give you a profit take move, what you'll find is you'll just gradually creep away outside of that ADR. But the longer that happens, when the shock comes, the news event comes that goes, oh, okay, this might be a little bit different, you're going to pop and you're going to get an ADR hit. So that's where you really want to sort of go, right, okay, I've got some profit. So I'm going to get out of this one, and this one, and I'm going to use 100% of that profit to scale out of that one, and that one, and bring my average back down into a controllable level. And because what happens in a squeeze is they tend to be very orderly, and then they become volatile when that trend ends. End of trends you have volatility. So if you look at something like the Aussie New Zealand, yeah, it's a good example. This isn't actually a squeeze, so it's not a great example. But you look at the movement and the size of the candlesticks and how much the movement is on this, yeah. And then when you get to the end of it, you get this boom, 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 boom. Look at the size of that compared to everything else you've had on the move up. The volatility and the strength and the speed of movement increases exponentially when you get to the end of a trend. And that's when you know the fundamentals have shifted. That's when you know the trend is coming to an end. You never really know. And this is the problem for trend traders. And this is why I'm not a very good trend trader is I don't think anybody's a very good trend trader because you can't tell when it's coming to an end. Yeah. If you get into the trend, for example, on that pullback, right? And you go, I'm going to ride this trend, assuming it is going to trend. That's a great entry. But look at where your exit was. If your exit is when you cross back down below the moving average, your exit is there. You only actually get that much of the trend. You miss all of that. The best trend traders and the best trend trading systems, I think, are the ones that get you in and out and then get you in and out. And this is what I do with the S&P. I get in and out, I get in and out, I get in and out on the long-term trend. But I have to be trading something I know that is going to trend. And the only thing I know that trends properly is the S&P 500. Everything else just does whatever the hell it wants based on fundamentals. You've got two parties involved, so it's very difficult to do. DAX is still just hovering. I'm just watching this on the other monitor. It's not really going anywhere at the moment. We're mucking about at the lows at the minute. This bull market has started. I am a trend swing trader. Explain me how some traders keep big trend trades so long time when big profit. Huh? You just told me you're a trend swing trader, and you're asking me to explain how you do it. I don't know. I'm not a trend swing trader. I can't answer that. You're the expert in it, well, King. You tell me. The bull market has started. I'd be a little good. Bull market in what? What do you think the bull market started in? What instruments are you talking about a bull market started in? Are you talking about the US indices? I'd be very cautious with that. Everyone thought the bull market was starting here, and everyone thought the bull market was starting here, and everyone thinks the bull market's starting here. Look what happened last time everyone thought the bull market was starting. Just because we're not going into recession in the US doesn't mean we're going to get back into a bull market. I'm not actually starting my EAs back up on this yet. This isn't convincing for me. That's not a convincing bull market. The volatility is still too high, I think, on this. Until we get this, the ADRs back down to normal levels. Yeah, look at the ADRs. This is how you tell when you're back in a bull market, as far as I'm concerned. Right? Look at these candlesticks. We're looking at 55, 42, 27, 27, 32. Yeah, so we're looking at somewhere around a 25 to a 35 ADR is typical in a bull market. We're at 54. 54 is typical with a bear market. Look at the size of the bull candles and look at the size of the bear candles. The ADR gives you an indication of whether you're in a bull volatile or a bear, a bull calm or a bear volatile market. We're in a bear volatile still, massively in a bear volatile. Yeah, look at the size of these bull candles. They're way too big to be in a bull market. At the moment, we are starting to contract, and we're seeing signs of this across all indices. So it is starting to contract, definitely. The DAX, I would say, yeah, we are getting closer, I think, on that. And the FTSE definitely has. But none of these US indices, to me at the moment, look bullish. That is not bullish at all. It's not bearish either, though. So I think the market's confused at the moment. It's easy. You have a profit target, so you hold until you get to your target, or you get an exit condition, a reversal. Yeah, as Diamond just said. I don't know. The trend trading is. I am a trend trader in the fact that I stay in line with the long-term trend and long-term fundamentals, but I'm not a trend trader in the fact that you get in and you hold. I just can't do that on any time frame. We need another flush before we get a bull market. I think we need another flush. UK is bullish. UK, the FTSE is definitely bullish in the UK. We are, I think, back in a bull market in the UK. But think about it. Why are we back in a bull market in the UK? What happens with indices, right? So when indices are in a bull market, what happens to the currency? Drops. What happens when we go into a bear market? The currency pumps. What's happening with the pound at the moment? Collapsing. What's the FTSE doing? Pumping. What's the dollar doing at the moment? Pumping. What are the indices likely to do? Drop. What's a drop? A bear market. It's not there yet. There's too many mixed signals. We've only just gone back into a bullish stance on the US dollar after having the markets collapse. And this is why the markets have been rallying. Yeah, look at the US dollar, look at the Dixie. If you want to look at the Dixie, look at the euro US dollar upside down. Yeah, this is pumping, which means the Dixie's come down. Now at the moment, the Dixie's going up because the euro's coming down. So this is the inverse index of the dollar index, basically, the euro US dollar. Which again, going back to what you said earlier, Big Papa, why I don't need to look at the Dixie. This is the Dixie. It's upside down, that's all. But yeah, this is coming down. Euro US dollar, which means the US dollar's going up. When the US dollar's been going down, the indices have been going up. US dollar's now going up. These are coming down. If we're going to get continued bullishness on the US dollar, we are going to enter into a new leg on the bear market. At the moment, but it's difficult, isn't it? Difficult to tell at the moment. It's all, everything's in a bit of a mess. Has been in a mess for a while, isn't it? I shouldn't talk, I don't actually do that. Yeah. I only talk about stuff I know about. I know about everything, but I don't do everything. This is what I said the other day, wasn't it? You can read as many books as you like. You can become an absolute expert on price action with Al Brooks. You could read all Al Brooks' 3 books, which are all absolutely amazing, and become the best price action expert in the world But executing the price action strategy is a completely different matter. I can talk about trend trading until the cows come home, but I can't hold it. I literally can't hold trend because I like money. You know, I like doing this. I like when this turns green over here, I like putting it over here, because in here I can draw it out and go and spend it. I can't spend that. If I've got a lovely 3.5% profit in something going long, until I realize that profit, that thing could go back down to zero. I can't hold it. I just can't do that. I'm not that type of trader. Some people are. I'm not. I just can't handle it. I can't handle it. Oh yeah, quick update on the my little experiment running the hedging set file on the market reverse alerts EA on every pair at once. Sitting in 11. We're sitting in 13k drawdown, and we've banked 14.5. I still haven't witnessed anything get into 1% drawdown, which is what I'm trying to do. I'm monitoring to see how much drawdown we can achieve with the drawdown control strategy that I'm using, and I can't. So as far as I'm concerned, what I'm expecting this account to do is whatever that is for the drawdown to basically kind of mimic it, if you like, and get stuck at a certain point. And I'm interested to see what point that gets stuck at. So yeah, it's going uncharacteristically well, isn't it? That's not really going anywhere. Yeah, it does look bearish at the moment. I'm still holding my short on it. But this very, you know, John Wick's back in the building, isn't he? John Wick. We need a John Wick. We need something to do with John Wick, don't we? John Wick, Chapter 4. This is going to be good. Probably going to be very violent as well. Mr. Wick. I love John Wick. I love Keanu Reeves, but I love John Wick. Comes out next month. John Wick. Anyway, that's nothing to do with trading. But yeah, very wiki. I need to get one of those, you know, like some of the streamers have that stream button thing where they press a button and it does something. I need a John Wick button. Every time we look at the DAX and it's wiki, I'm just going to press the John Wick button. You're a hit and run trader. Yeah, I am a hit and run trader. Most traders are. I don't know many traders that make money that aren't hit and run traders. That's the whole point. I just hit in a different way. Non-repaint indicator. That's a good name. You've called yourself non-repaint indicator. Okay. Is there a version of this ADR you have on TradingView? No, don't use TradingView. With Donnie Yen in it. Yeah, I know. It's going to be very good. The onward haven't got in yet, but I've got pendings below the opening range lows. How can you not be in yet if you've got pendings below the opening range of lows and highs? Oh, it depends which opening range you're using, I suppose. Obviously, a bigger one. One of the best action movies of the last few years. Yeah, John Wick's awesome. I love John Wick. Mr. Wick. So bias scorecard hasn't changed. We've had no fundamentals that have changed anything really this week. Sentiment has changed a little bit, not a lot. So everything is still as it is there. So any of this that you've got on has all been doing pretty nicely if you've been in and out, but not really gone anywhere. US dollar CAD longs, obviously, happy days. New Zealand dollar CAD longs, not really gone anywhere, unfortunately, just sideways. A lot of these have gone sideways at the moment. But yeah, everything on the bias scorecard really has been working nicely. The pounds at the moment, though, the pound New Zealand and pound US shorts, they're they've obviously started to play out now, but we've got this rally going on at the moment so far today, although that has actually been squashed by the looks of things at the moment. So they've just taken the Asian highs on the pound US, and pound New Zealand's stalling up at these highs as well. John Wick's entered the building. I'm going to create an indicator called the John Wick. I'll probably get done for copyright, wouldn't I? And all it's going to do is it's going to alert you when you see 3 long wicks in a row. Long wick. Mr. Wick. Because I'm a chicken, I don't put any of them right away. Stop being a chicken. Got to be in it to win it. It's like the lottery. Do you know any good US brokers for trading indices? No, because I'm not in the US. ADR is just D1 ATR 10. Oh yeah, so whoever it was, it asked about an ADR indicator on TradingView. If there is an ATR indicator on TradingView that draws lines at highs and lows, use that and just program it to use ATR of the daily 10. Same thing. Won't give you the extensions, but... And if you want to use, people ask me a lot of the times, they switch platforms and say, have you got, I bought the whatever indicator for MT4. I'm now trading on MT5. I need the MT5 one. And it's a different product on a different marketplace, so you have to go and buy it again. So all I say to people is just have MT4 running on a demo account and use that for your indicators. Yeah, trade on MT5 or trade on TradingView or do whatever you want, but use MT4 for the indicator. So if you want to use the my ADR indicator, but you trade on TradingView, get an MT4 demo account, launch this, and this will give you the ADR alerts. Yeah. But trade on TradingView or whatever. Nothing to stop you using MT4. It's a free platform. Do you know any good US brokers yet? No. I missed most of the whipsaws and nearly all of the runs. Yeah. This is the danger. Like I say, this is a long-term edge. All we're doing really with the opening range breakout EA is we are playing the long-term odds. It's just a way of playing the long-term odds. We have no way of knowing what it's going to do at the open. So all you do is you get in. And the days that you milk it, you milk it. The days you don't, you don't. There's more days you milk it with bigger amounts than the days you don't. And that's literally the edge. Like I say, you are going to have days, maybe weeks, where it's just not going to make money. But then you're going to have, like, I've had 2 solid days on the NASDAQ, which I've made over nearly 6K. And I'll be withdrawing it. So it's just, you got to wait. It's great for prop because you can build up, you can just let it run. And when it gets to that level on prop, just draw it out. If you go into $2 grand drawdown, $3 grand drawdown, $6 grand drawdown, just got to deal with it. All of a sudden you'll get 2 days where it will bank 6 and you're back to square one. You're like, brilliant. Then the next day it will bank 3 and you can go, right, I'll have that. As long as it doesn't, and this is the whole point of the ORBEA when I did the back testing, looking for limitations for drawdown. So at no point will it go into 12% drawdown. That's the key. As long as it doesn't go into 12% drawdown, it's not going to blow the account. I've just got to wait for it to get into profit to draw the money out. That's the use. That's the purpose. Obviously, once you've got the account. Wicks don't lie indicator. Yeah. John Wick indicator is what we need. Mr. Wick. I might make one of those, Actually, I might do that this afternoon. I'm going to build an EA. And I'm going to, with the EA, I'm going to say, look at the last 6 candles. If those 6 candles have 3 of them have wicks bigger than 40% of the candle size, go long. Because I think that's probably a pretty good strategy, isn't it? Rejection wicks. If you've got a load of rejection wicks, go long. and use a 1.5R. Very simple strategy based on purely on price action. When that circumstance occurs, go long, stop under the low of the 6 candle wicks with a 1.5R. I reckon that's a pretty good strategy. I might build that this afternoon. Give it a test. NASDAQ, the Dow. My God. Drugs. What's that thing called? That German one, DAX. DAX. Attempting to break out the lows. Trader rate for future in the US futures. Yeah, if you want to trade futures, if you want to use Trader, I don't use Trader for trading futures. I use Jigsaw. But Trader is a good broker. But they are a great broker stroke software provider, a bit like Ninja. But natural gas, possible bottom. Don't trade gas. I haven't got that one, sorry. I've got to get past stage 1 first, though, yeah. That's the tricky bit. As we discussed in the live room at length yesterday, the way to pass a prop firm is to do 10 challenges. Guarantee you will pass one. And then use that one to make money. Let us know how many kills the wicks. Don't lie, get then. Yeah. But it's not working at the moment, is it? Look. That would be awesome. I was just having some thoughts about what I could do with it. So I'm going to build an EA, and it's going to monitor wicks. And every time it takes an entry, it's going to do an alert. And I'm going to get a soundbite of John Wick. And that's what the alert is going to be. So when it's setting up, it's going to go, Mr. Wick. I don't know what I'm going to get it to do then. And then after it gets in, I'm going to say, we need guns. Lots of guns. Bit of a Matrix reference. So I'm just filling because nothing's happening at the moment. If anybody's got any other FX pairs they want to look at, let me know. But there's not a lot happening, really, at the minute. We are quite sideways at present. We had quite a sideways session as well yesterday. So nothing is particularly exciting at the moment. Pound is probably the only thing I can see that actually might make some progress today, but it is very mixed. It's not particularly strong. It's the US dollar's holding it down at the minute. Got a bit of a weak yen as well, by the looks of things. Apart from that, not a lot else is happening. Yesterday, you mentioned about trading a 30K account, but trade it like it's a 100K account using leverage. Can you explain how this works? Wouldn't you see 10K drawdown if it goes into 10% drawdown? Yes, you would. Yeah, exactly. That's exactly, you just answered the question. If when in position trading, yeah, in a not so much a worst case scenario, but if you haven't got a large bank account to use for trading, you can simulate it. So just before, just after COVID, actually, when I first started doing the private live rooms like 3 years ago, what I had at that time a 40K trading account I was trading with, but I only ever put 10K into my account, into my broker account. But I would set the trades up as if I was trading a 40K account. So what that gives me the option to do is if it gets to near blowing the account, i.e. I go into up to 10K of drawdown, I can just add more money into it. But it means that I've got my trading balance secure elsewhere, not in the broker. I've been stuck. I've been hit by black swans that have basically killed me. Well, not killed me, but wiped my account out in the fact that my broker's gone bust. I was fine. My broker went bust and I lost my trading balance. I had to go through the courts to get it back. because the broker went bust, and it's just a long-winded process. So from that moment on, I've only ever kept a percentage of my trading account in my broker, but I trade with my full balance. So if you had, for example, a 20k trading account and you only put 5k into your broker, you need to use 4 times the lot size for the account that you've actually put into the broker, don't you? So it's the same thing. Using a 30k account and simulating a 100k account with it, if I go into 10 grand worth of drawdown, 10% of drawdown, that's fine. I've got 30k in the account, but I'm going to make big money off of it. I don't do that. I'm happy with position trading to make sort of 3.5k a month. 3.5, 5k a month is fine for me. And that's what I make. That pays all the bills. Everything I make on top of that comes out of prop. I'm making more money now than I have been for years, but that's due to prop. I've really ramped up my prop trading. But that's not position trading. Can't position trade on prop. You can, but it's really it's really hard. Really hard. I've done it, but I've passed with it. But I've failed with it as well because you can't control the drawdown. That's the thing. You just cannot control that drawdown. You know, I'm sitting pretty at the moment, 3.5% with. I'm sitting in 0.7 drawdown with 3.5k banked. But there'll be times when I'm not, and that's when you blow those prop accounts. This would have been beautiful. This month would have been absolutely beautiful for a prop account evaluation. I haven't had any drawdown much this month. But then, you know, you can't decide that. You don't decide it, do you? The markets do. Are you trading using challenge prop firms? So I use my Forex funds and I use E8. And for futures, I use Take Profit Trader now, or I used to use Apex, but I use Take Profit Trader. There's links on that page there to my broker is Robo, my Forex funds, or E8 for CFD prop, for futures, Take Profit Trader, or Apex. There's the only, with Apex, with futures, if you want to be a futures trader, your only real choices of good ones are Take Profit Trader. The rest all fall into the you have to trade for a minimum of 30 days to get your money out in any shape or form category. These guys, you can withdraw straight away. Yeah, instant withdrawals. That's the big advantage of Take Profit Trader. And you can also get 40% off if you use that code. Apex basically are cheap, but you don't actually get a full withdrawal from your account for 3 months. And it's quite hard to hold the account for 3 months, especially with futures, because you've got restricted risk in futures. You can't adjust your position sizing as easily because you can only deal in single contracts. So it's a lot harder to control your risk and control your drawdown. It's a lot easier to make money as well. I've had some of my biggest profits out of futures trading actually with Apex, but they're all, you know, pretty much luck. You know, I get in long, and all of a sudden the Ukraine war kicks off and it flies, or you know, getting short. I'm getting short of the Ukraine war kicked off. It went short, but you know, you get into a position and you start building a position. It goes nicely into profit, and then something happens and it flies. You can make 3 or 4 grand just like that with very small risk in futures. If futures wants to go, it goes. If you get on a trend day in futures, if you catch the value area low at the right time when a trend day is going to start and it gets above that VWAP and it goes, you can make a lot of money, but those days aren't that often, and the rest of the days you struggle. So that's why I like Take Profit Trader for futures, because you can withdraw straight away. You haven't got to wait. So when you get those big days, you just take that money out. Similar to these guys have got fast payouts, which is why I like them. Easy rules, fair pricing. None of them got trailing drawdown, intraday. You know, they're both very, very good. E8 specifically, I like them because you can pass on one day. I should highlight that, shouldn't I? No minimum day rule. That is the main selling point of E8. You can pass today. You haven't got to wait 5 days, 10 days, or whatever like you have with my Forex funds. Yeah. Pound New Zealand has taken yesterday's high. So watch that for a potential reversal. DAX is just stuck at the moment. But it's dangerous that the broker automatically close all your positions due to margin call. You don't get margin calls if you're using 500 to 1 leverage. You won't get a margin call. I get a margin call when I'm almost down to negative my entire balance. Margin calls only exist on low leverage brokers. Well, they exist on all brokers, but obviously you won't get a margin call if you're using 500 to 1 leverage or 200 to 1 leverage or 100 to 1 leverage. I mean, it's just, you just very rarely get a margin call. If you do, they'll shut your positions and you lose the balance, which is why you don't let it get that far. Don't forget, your broker is going to do everything in his power to spread at the swap. He's going to spread out at news. He's going to do everything in his power to give you that margin call. Do not let him do it. Use a 500 to 1 leverage broker and you will not get a margin call. Crazy. Do you trade crypto? No. Some people use their liquidation as a stop loss. Yeah. I use that in my proper valuation. Some of my proper valuations, I do that, especially with E8. You've got 5% intraday drawdown, right? I'll show you how I passed E8 in a day, two levels, right? What I did in the morning, and I was lucky. You know, you can't do 16% profit in a day consistently. Nobody can do that. No one on this planet trading can do 16% profit a day every day. You've got to get lucky, right? So the way I passed it was the DAX rather, in the morning. What I did was I used the Price Action Toolkit. Yeah. And basically all I did was I got into the DAX with a short. So I was on trading an M5, right? So I went sell stop there and it dropped. It pulled back. I put a sell stop under the next candle. This is with 1% risk, right? It pushed down. It pulled back. I put a sell stop under the next candle. It pushed down. So basically what I got on was that. Yeah, with 1%, 1%. It pushed down 8%. I closed it, right? Literally, I was done within an hour. Let me just cancel that pending off because I don't want it, right? And then I waited for the New York Open, okay? And I switched over to the NASDAQ and I put an opening range breakout in, which I'm not going to do now because it's too close. But I basically straddled the high and the low at the open. We got a whacking great candle. I moved everything immediately to break even. It pulled back, I added, and it popped. I got into a trend, 8%. I was done within 30 minutes. So stage 1 took me about an hour. Stage 2 took me 30 minutes. At the end of that day, I had $100,000 in my account, funded for the next day. But that is not going to happen every day. Yeah. If I hit the sell button now and I get into a short here, this thing goes like that, I've lost 1% of my account. But what you can also do, and I've done this as well, is position trade intraday. So where we are at the moment, I would be saying, right, I reckon we're going to come and challenge these lows. So I would enter a position trade here. So I would go short. If we pushed up, I'll take another short. If we pushed up, I'll take another short. As we push down, I'll bank that. Then I'll go and try and go for the low again. And when it goes, I'll just add and I'll add and I'll add until we get down to there and I'll just build a position. But as you just said, my stop loss is 5%. If this goes into 5% of drawdown, I just blow the account and move on to the next. Yeah. If it costs me $500 per account and I do 10 of them, I will pass 2 of them, sometimes more. Out of those 2 or 3 that I pass, I've only got to get one of those over the line with 5K and I've broken even, haven't I? That's the way to play it. Yeah. You know, if you've got a $1,500 trading account, and this is what some of these people do when they're compounding, you know, they got a $500, I can't do it, $500 account, yeah, and they try and compound it. So they'll risk 20% of their account per trade, one entry, and then they'll do that again, and they'll try and build it up to $1,000. And then they'll withdraw 500 and they'll try and do it again. They keep doing that. If you can do that 3 times before you blow your account, you've just made $500. It's exactly the same as prop. All you're doing prop is you compound. And you're going to blow it regularly. But the ones you don't blow, you're going to milk. Like the one I posted in Telegram yesterday. 2 days, I've made $5,800. I'm withdrawing that. It's just the way to do it. Or then when you get your account, you drop your risk right down. But you can do that on E8. You can pass in a day. Price Action Toolkit is a great tool for that because you basically will be able to just scalp in and out and it gives you your profit and everything. It does everything for you. So, but yeah, you got to be lucky. You got to pick it on a day where it's going to allow you to do that. Today, if I was trying to pass E8 today, do you think I would have passed it today? No. I would probably have been stopped out on 3%. And I'd be sitting there with 2% left. But what I would probably do is go 2% short on a breakout down to there and make 6%. And then go, right, I'm 3% up. Now let's wait till this afternoon. There's all sorts of ways of doing it. But when you're trying to pass prop quickly, and this is the problem I find with E8, it makes you over leverage. That's what it's designed to do. They know that. They're not stupid. But for me, it's that emergency backup. If I have problems with my Forex funds accounts and I blow them, I've got to wait 10 days to get them back. With this, I can get it back today, like emergency funds. But that's what I do with prop anyway. Seeing those results are typical. No, those results are not typical. Well, I don't know. For me, they're typical. I'm not greedy. I'm not a greedy trader. I'm not looking to make millions. I'm looking to pay the mortgage and live a comfortable lifestyle. So if I get $5,000 in the bank, I'll take it out and I'll use it. I don't try and double that 5K. I've never doubled an account. I've never got an account to the point where they've increased my account. I don't hold them that long. Not that sort of person. Some people do. I think there are some people do. Yeah, DAX is short. DAX. Oh, Diamon's going short on the DAX. Everybody go long. You have 30 days to achieve 8%. Why do you want to achieve it in one day? So I can get funded today. That's the only reason. I wouldn't normally. If you want to trade properly, my Forex funds I trade properly. My Forex funds accounts I only use 0.5% risk. Yeah, that post I put in Telegram yesterday. Ooh, this one. Yeah. So this is the opening range breakout yesterday on the Nasdaq. So the 15-minute ORB is there. Got a second bite of the cherry on it there. There's 3 trades taken there. And then I've got the 15-minute opening range break as well. Yeah. And then the day before I did something very similar. That is me done for this account. This account now is not being traded anymore. But this is using 0.5% risk. This is not over leveraging. I'm getting in with 0.5% here, which is $500. So I'm risking $500 per trade. In 2 days, I've got a 10R return because I've had 2 days where we've had really nice, solid breakouts that have made money. But that doesn't happen every day either. That's how I trade on my Forex funds, because my Forex funds is a minimum of 5 days per stage. So you've got to trade 2. You've got to trade 10 days. You've got to do a stage 1 and a stage 2. With E8, if you want to, you can do it today. I could hit the button now, right, and go short 5%. So I could put my stop loss here with a 5% short. And if this thing gets down to there, I've made probably I've probably done it, haven't I? Yeah, so let's say we're looking for a retest of the lows. And I get in right now, short here, with my stop loss there. That's 25 to 43. So if I get in with 5% short now, that's a 10% gain. That's evaluation stage 1 passed. And this thing could take probably, I don't know, if we're lucky, it could do that in half an hour. If we're unlucky, it might take half a day. But do you see what I mean? With prop, especially with E8, the mentality you have with E8 is I can pass it in a day, so that's what I'm going to do. With my Forex funds, my mentality is I can pass it in 5 days, so that's what I aim for. With CTI, City Traders Index, City Traders Imperium, rather, not Index, they have a minimum of 30 days. So with them, the target is 30 days. I'm going to pass in 30 days. So I make sure I've hit target in 30 days. You will psychologically, with a prop firm, go for the target they set you. And E8 set you to do it in a day. So what do? You leverage to that level. But the problem is when you pass the account, you're conditioned to be over leveraged and you won't ever make that 16%, as Zamalex just said. You're not going to make that 16% every day. You're going to blow the account. And this is why most people blow their accounts in week 1 of having them, because they've been conditioned for the last 10 days or however long to be trading high risk. What you should do is drop down to 0.25% to 0.5% risk as soon as you pass. And then you will see that the account, you can hold it, but you won't make 16 grand a day. Some people do. E8 have got a leaderboard. When you go and sign up with E8, in the back end of E8 in their dashboard, there's a leaderboard, and it shows you how fast people are passing and what the top payouts are. People in there are getting payouts over $100,000. Do you think they're doing that with a 100K account, doubling it, using good risk management? No, they're gambling like crap. They're going 5% short, getting a lucky propulsion candle. They're waiting for it to pull back. They're adding a 5% short there. They're now 10% short, and they get a news event which drops it down. They get 80K in profit, and they go, stop. That's cost them $500 to draw that 80K. Total gambling. But it's the same as going in a casino and putting your entire salary on red or black. You're going to win half the time, aren't you? If you start playing the prop firms like that, then you're going to have to do a lot of evaluations because you're going to blow a hell of a lot of them. But you're going to get lucky. When you get lucky, you're going to get a lot of money. So there's 2 ways of playing it. Personally, I prefer to use small risk and keep them as long as I can, but I blow them regularly. But it's a business, isn't it? This is what we were talking about yesterday. If I spend 15K on evaluations in a month and draw 30K out, I've made 15K. Yeah. It's a business. There's my cost of doing business. There's my profit. There's my return. There's my profit. Yeah. If I spend 5K on evaluations and I make 5K, I've made 0 profit. Same as you having a $5,000 trading account, putting it in your broker, and then making 10% on that, you've made 500. But the trouble is you can't live on 500, so you need to go and get a 100K account. Where can you get that? A prop firm. It's all about getting the capital. And that's why they make so much money, because everybody's trying to get the capital. But 99% of people, 99.55% of people fail because they're conditioned to use too high leverage and blow it. The greed. Well, this is very boring, isn't it? So I'm going to stop talking about the DAX. Well, I haven't talked about it at all because it hasn't gone anywhere. So DAX, I'm still short. This is the only trade I'm taking. You can see my pending orders have been cancelled off because we're 1.5 hours in. So I am no longer going long. If we go short, fantastic. Otherwise, that's it. I'm doing nothing today. So the DAX is just stuck. The rest of the indices are not moving either much. We've got a little bit more movement on the on the S&P. Not really, actually, looking at it. And the Nasdaq is a little bit more bearish. But yeah, it feels heavy, feels bearish. It might go, it might not. If it doesn't go, it's going to be a double stop out for me today on that. But other than that, hopefully we might get a bit of bearish movement. Nasdaq's certainly doing it. Dow's stuck as well, so all load of rubbish. Everything else is sideways. We've got no ADRs. There's no RSI extensions apart from the US dollar Swiss, which we had earlier. There you go. There's a US dollar Swiss entry that we were talking about earlier. So we've entered that zone. It's rejecting off of this zone already. So there's already sellers starting to step in. Look. So anywhere up here, you get a reversal alert. Is a good potential short. So hopefully this afternoon, the PCE comes out as either as expected or a slight drop, and then we'll get some weakness coming off of the US dollar. So it's ready. It needs a bit of a rest after this 5-day, well, it's 3-day rally, really, isn't it? So I'm taking some counter trend shorts at the moment on the US, but that's nicely entered that zone. You know, and again, when you talking about trading prop, if you want to be low risk, the best time frame to trade on is the hourly. Yeah. So looking at this area here, where we are now, a really good low risk trade on this is to get in short somewhere in this area with a stop somewhere up here, you know, half an ADR away from the high. Wherever you get in, if you're giving your trade room to breathe, you're going to have a few days for this thing to play out, wherever it's going to go. And you'll get a very high strike rate because the chances are, if you're putting half an ADR stop above a zone, you're going to get out of that. You know, and something you could do is just use a 1.5 R. So if you got an ADR hit, for example, today on the US dollar Swiss, get in short, stop up there, and just target a 1 R return or a 1.5 R return. If you get 50% strike rate on that type of trading in prop, you're going to pass. And you can use a 1% there. You only need 8 trades, don't you? So just drop down, wait for the reversal alert, or set the EA up to get you in on that nice M pattern reversal we've just got starting. As soon as that reversal alert kicks in, we've got the buyers on side. Got a chance of a drop, haven't we? But use a massive stop. So it's like a position trade, if you like. So exactly what I'm doing, you know, position trading. It's the same thing. I've only got one position on at the moment, but you know, so I'll take a second position on this if it pushes, and then get out later, but with very small risk. We're seeing the sentiment EA's taken a trade. That's good. What else is it taken today? CAD Swiss. It's the only one it's taken. Oh, that's 101. Right. Sorry, I was just. When's that candle close? 36. Okay. So I was just monitoring that. Right. Have you tried True Forex funds? Never heard of them. EFF. June 2021. So they've been around for 2 years. Hungarian. This is futures, isn't it? C Trader. Oh no, C Trader's CFDs as well, isn't it? 5 days, 5% maximum daily loss, 10% overall, up to 30, 5 minimum, 10. So this is basically the same as my Forex funds, isn't it? Funded 80-10, 80-20 split. So it's basically the same as my Forex funds, except it's more expensive. So 100k account is 499 euros. Yeah, so it's just the same as my Forex funds, but more expensive. So my Forex funds is $449. They're 449 euros. So that's more expensive. And exactly the same conditions. So yeah, I mean, there's probably nothing wrong with them. Who's their broker? That's the key thing. If they're using 8cap, run a mile. Leaderboard. There you go. Look, proper traders. Realistic returns. Yeah, none of this 20, 30, 50% profit crap. That's what you make. This is what you're going to make a month. Do they use deal? My God, they publish your payouts. I've never heard of these guys. These guys are off the radar. I've never heard of these guys. Have you used these? Whoever said that then? Zamalek. I've never heard of these guys. Oh my God, you can see other people's account statistics as well. That's pretty cool. Nice, good equity curve. It's gone into 1400 to draw down. That must have been Papping himself. That's pretty cool. I'll bookmark these ones. I've automatically prop firms. I want to know who their they haven't got an FAQ, have they? I want to know who their broker is. They haven't got a very big blog, have they? How long have they been going? August 22 is their first post. Who are they? Impressive trading conditions. Liquidity providers. Who is it though? Who is your liquidity provider? Good spreads as well. I don't know. They have a reasonable challenges. My friend has withdrawn from them. Yeah, they look pretty good. I might give them a go. I might sign up with them, assuming they've got MT4. They've only got C Trader there. Actually, it did say, didn't it, on there what platform these guys were on? Where did I see that? Where did I see payouts, wasn't it? Yeah, MetaTrader 4. Yeah, that's fine. Oh. Right, so that was a non-stop loss trade. I can tell from the P&L that was a no stop loss trade, basically. That was a position trade. There, he got in. He scaled in with no stop. And he took the whole lot off when it came back into profit. Probably martingale as well, judging by the size of the two trades. Anyway, doesn't matter how you get it, as long as you get it. Oh, he's not in good. He's not doing well, is he? Worst trade, $150. Best trade, 306. Positive R. It's good. 37 trades. What's he trading? I like these guys. These look good. Well, they've certainly got an impressive back end, haven't they? I like the fact you can look at everybody's trades. That's pretty cool. You don't know who they are, though. That's the good thing. That's a good payout. Look, that guy. 200K account. Jesus. What was that? Uh, 47 minute. That's a scalp, look. One scalp. 4% profit on one scalp. See, this is what you do. You get in, you get out, you stop, you take that money out, then you move on. It's the way to do prop, not muck about. Jesus, loads of chats coming. Do you have to tell the prop firm if you're using an EA? No, you don't have to tell them anything. They know you're using an EA. Every trade you take with an EA is logged. So on here, look, it says placed. When you hover over your trade, it says placed by expert ID 21. They can tell you're using an EA. So that's the other question is, what are their rules? Where's the rules? Where's the rules? Trading rules. Authorized trading styles. Any styles welcome. We're looking for skilled traders. Scalpers, day traders, swing traders, and new traders. Blah blah blah. Trading tools, indicators, EAs, and bots are allowed. If that is what makes one's performance better, we support them. Higher time HFT trading is allowed. That's new. They don't normally allow HFTs. Hedging is also allowed. Yeah. Martingale is acceptable. Really? Wow. Signal services are permitted. God, these guys don't give a monkeys, do they? Right. I'm going to try these out. The problem people have with a lot of prop firms is they're scared about using signal services or EAs because, like with the opening range breakout EA, obviously, it takes trades on the opening range breakouts. If everybody's trading the same strategy, they're all going to trade the same entries within reason, aren't they? But people will have different trailers and things. DAX is dropping, by the way. We've got new lows. Yeah, the fact that these guys don't actually give a crap is pretty good. Weekend trading, hopefully you can hold over the weekends. Overnight and over the weekends are acceptable. That's good. Authorized trading styles. What's the difference between prohibited trading strategies? Changing MetaTrader's password is not allowed. What? Why would you do that? Account management is not allowed since we are looking for a right. So what's the difference? See, that's a grey area. That. What's the difference between account management and a signal service? Do you know what? Most account managers, most people that do account management, what they do is they provide a signal which you copy into your account. That's what their account management is. So that's a grey area because that contradicts their other rule. But obviously, don't use account management anyway. Prohibited trading strategies are forbidden because of vulnerable blah 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 blah. Certain EAs and robots take advantage of MetaTrader's inefficiencies. Tick scalping and arbitrage bots, yeah, that's fine. Latency arbitrage, hedge arbitrage, or any other emulators are not prohibited. That's fine. Strategies are not trading according to live conditions. No. Strategies opening positions in opposite directions on different accounts is forbidden. If anyone would use any, how are you going to know that? If anyone used any of the methods above, yeah, that's fine. So that's all right. These guys look all right, actually. News trading, We know the big investors are predicting possibilities of vibrant news, so our clients' news trading is allowed. Yeah, thankfully, someone that agrees with me. Oh, can we not trade over the news? Why don't you want to trade when all the liquidity is entering the market? Copy trading. We give the opportunity to manage multiple accounts in one click. You can copy trade between accounts. That's great. Yeah, I've never heard of these. I don't know how they've not got onto my radar, but I'm going to give them a go. I'm going to sign up with one of them, and I'm going to do one. They are more expensive than my Forex funds. But yeah, it's worth having a look at them, I think. Good find. So DAX, we are out of the lows, short. In a squeeze, couldn't you build up a hedge position? You could, Cam. Yes, if you want to. So, I mean, obviously, this is what the hedging EA is doing. Look, thanks for the follow. There's loads of people subscribed this morning. Thanks for the follow. I haven't mentioned your names. I'm a bit lax on that this morning. Little Nyambani, Mr. Miki, and Bini Maharajan. Large Indian contingents in here today, then, I guess, or Pakistan. I don't know. I'm not very good with names. Don't shoot me. So yeah, this is what the hedging EA is doing. Basically, it just builds up money and manages the drawdown with drawdown control. So yeah, if you want to hedge, this is the set file for you. So this is the market reversal alert, say EA running the M5 hedge set file with slightly modified drawdown control conditions. So yeah, this is exactly what you can do. But obviously you need to use appropriate lot sizing for the account size. This is, you know, that will blow your account, obviously. But you would have hit profit target before you would blow the account. So yeah. But yeah, you can hedge, of course. I don't hedge most of the time because I get myself into a mess. If somebody had money for just one EA, which one would you advise? Market reversal alerts. I don't know, actually. How do you want to trade would be my question, Mumo. So if you can only buy one EA, ORB or market reversal alerts, look at what the strategies are on the website. Yeah. So the reversal alerts EA can trade multiple strategies and multiple styles. It can trade with a stop loss or it can position trade. The ORB strategy is a pure momentum breakout strategy that happens twice a day. So what's your trading style and how do you want to trade? This is a high aggression strategy, which is designed to bank fast and lots of money. Oh, look, we got a adult dating chat in. I've seen you for a while. This is a completely different style of EA and style of trading to the market reversal alerts. Market reversal alerts you can use on any time frame with multiple strategies and trade in any way you want to. It's much more complex than the opening range breakout EA. So ORB is I'm only going to trade once in the morning, once in the afternoon on the DAX and or the Dow, NASDAQ and S&P. Market reversal alerts is long term. So they're different EAs. So you have to ask yourself that question. Both will make you money, but they're totally different strategies. Yeah. So look at the strategies page on the website. That's the opening range breakout strategy, and that's the opening range breakout EA. These 5 are all traded by the market reversal alerts EA. So you've got much more variation with the ORB, with the market reversal alerts EA. I don't know what the answer is to that one. They have reasonable challenges. My friend's been withdrawn from them yet. So what do you think about the funded trader? They got 12% max drawdown limit. Which one is that? I'll have to remind myself. Oh, this is this. Yeah, I can't. Nah. No. There's something wrong with them. I can't remember what it is, but they're it's too hard to pass for some reason. I can't remember what it was. Oh yeah, look at the price, $1,400. The 100K, because there's all these things. It's so complicated, and they've all got slightly different variations. What they've tried to do is get a challenge or an evaluation system that works for everybody. But what it's actually doing is it's taking the best bits and the worst bits of other strategies, other evaluations, and putting them together. And I couldn't find anything on here. I did a massive spreadsheet at one point, and these guys were in this spreadsheet, and I put down all the pluses and minuses about them all. This one came out with more. Oh, there you go. Trading using A's and no lot size limits. I think they used to not allow that. Yeah, I couldn't find a way to make it better than my Forex funds. But I don't know, try them. My friend they were very transparent and got paid 25K. Yes, they have an NT4. Yeah, cool. If everybody is using the same EA, for example, 100 people using the ORB EA, will they get banned? Yeah, as Diamonds just said, I was just going to say about that hedging. Be careful with hedging, because you could get yourself into underwater in both directions. If you're going to hedge, I'll come back to yours in a minute, Big Papa, the answer to that question. If you're going to hedge, you need to get out of one direction, right? So what this particular set file that I have running on here, yeah, what it's doing is it's hedging, buying and selling based on RSI extensions on the hourly, yeah? But what it's doing is for profit, when a hedge, a position gets into 0.5%, it closes that position out. Yeah, in profit. So it's always getting out of one position. What a lot of people do with hedges, and the problem with hedging is you get in to a hedge and then you never know when to get out. And normally what you do is you get out of the hedge at the wrong point. So with hedging, what I'm doing is using 0.5% profit. So I'm consistently banking $500 over and over and over again, regardless of what happens. But I'm also scaling out of 1/3 of these positions just as I come to bank. So it's scaling out, it's using the profit from the hedges to reduce the drawdown, which makes it easier to get out of the next position. Yeah. So that's the problem with hedging. If you do it manually, I think you've got to do it automated, because to work out where you need to get out and everything is so complex. And it's never going to be right, because when you get out of your hedge and that hedge continues in that direction, you're going to be cross with yourself. If you get out exactly at the right spot, but don't get that other sell on in the other direction because you weren't sure about it, you're going to be cross with yourself. And I just find it gets you into an absolute mess. Every time I've tried to hedge manually, I've just got myself into an utter mess with it. And I know a lot of other people that have as well. So to answer your question, Big Papa, if everyone is using the ORB EA, will they get banned? If you're using the ORB EA on full automation with the same set file as everybody else, then there will be a footprint. But what the vast majority of people that are DMing me in Telegram and stuff, and again, I don't know why people don't use the main thread, but what they're saying to me is they are using the ORBA in virtually the same way as I am, to automatically get these trades on and then manually manage them. So what people are doing is going, oh, like this doesn't look like it's going, and they close it. So you're going to get a different exit. But with the settings on the ORBEA, there are so many variations that you can use with the set files. Like, whoops. So if you load a set file, I haven't got any on this one. I haven't got any set files on here. Sorry, no, I haven't got any. So, you know, whatever set file you're using, if any of these settings are slightly different to anybody else's, you're going to get a completely different result. I've got 3 versions of a set of set files running on different accounts. They're all getting completely different P&Ls. So it's unlikely. And that's why I build my EAs the way I build them, so that they can be configured to your liking. But also, I run my EAs on my Forex funds, yeah? And no, I've run my EAs on my Forex funds for over a year. No one's ever come back to me. I've made multiple withdrawals. No one from my Forex funds has ever said, you're using an EA. No one. Because you won't trade it. You will not use the EA exclusively on it. What you will do is you will go, I actually like this here. I'm going to take another short. And then all of a sudden your P&L is totally different to somebody else's. So therefore their algorithms won't pick it up. What they don't want is everybody buying these crappy EAs out there that are we guarantee to pass your evaluation EAs. There's loads of them all over. There's what's it called? There's one is it called Pass My Challenge or something? Pass My Challenge EA or something. Pass your FTMO. There you go. They're advertising. They're just commercial businesses, basically. They're selling EAs, right? It normally costs you about $1,000 or something stupid. There you go. $600, whatever. These guys will pass your evaluation. What they do is they use the same EA on all of them, right? So immediately when you pass that evaluation, there's a footprint. Some of them allow you to use the EA moving forward, but the EAs are so high risk, they blow the account when they get it anyway. So they're just a big con. The whole lot's all a big con. What they don't want is people using these, because if you have 100 people using exactly the same EA on a live account where they are actually using funded capital, the risk profile for them is massive. That's why they don't want people using them, because companies like My Forex Funds are actually funding you. FTMO are actually funding you. Yeah. The first month, usually, they're evaluating you after you've passed your evaluation. So you're actually trading on a demo account, but they do copy trade sometimes. If you're using the same EA, yes, the evaluation. Let's say, for example, 100 people get a 100K account. There's millions there, isn't there? Yeah. It's $10 million of risk. All on the same strategy, the same EA. And when that same EA blows every one of those accounts, it blows 10 million. They would rather blow 10K or blow 100 grand, won't it, of their capital. So that's basically why they say it. If you're using something like the Market Reversal Alerts EA or the Opening Range Breakout EA, where you've got so many inputs, it's virtually impossible to get it to take exactly the same trade as everybody else, you're never going to have that problem. Well, I haven't, put it that way, I haven't had that problem using my own products on prop. So, or any EA. I've got other EAs that I'm testing on prop as well, and no flags at all. So I wouldn't worry. Which is the EA you have that you said you can just set up and leave it to run itself to get steady increases? All of them, both of them. No, I've only got 2. Well, I've got 3. Yeah, the Market Reversal Alerts EA and the Opening Range Breakout. Price Action Toolkit is a manual EA. It does auto trade if you want it to, but it's designed to manually trade. It's a scalping EA basically. But these 2, you can just set them running and let them go. Yeah, that's what these are doing. Yeah, so this is running a hedge set file. This one is running mean reversion. This one is running ADR reversals. Yeah, they're just running on full auto. I am obviously watching them and I do intervene if I need to, but they're all just getting me into the trades. They're just trading my strategies. Yeah, all the strategies on here that I teach in the bootcamp. It's trading that. It's trading these on full auto, but it's up to you. Mace, are you the type of person that wants to go and sit on a beach, drink a Mai Tai and have an EA earn you your money without ever touching it? If so, it's never going to happen. Sorry to burst your bubble, but that doesn't exist. Market conditions change and you need to change with the market. But if you want something that you can automate a strategy that works and is proven to work and monitor it, then those 2 will do it for you. The Market Reversal Alerts EA is the safer because it's a low risk strategy. Position trading is a low risk strategy until you get into a squeeze. But there's ways you can filter squeezes. Yeah, buy a scorecard, moving averages. There's all sorts of ways to filter squeezes out and deal with squeezes with drawdown control. But the reason I like using the market reversal alerts EA is because it does the drawdown control for me. So if it needs to do DD control, it will do DD control. Yeah, rather than me having to think about it. Look at all these losses it's taking. What's that? Oh, it's by symbol. Okay. That's what I was going to say. There's a lot of losses in a row there. It's not sorted by date. But yeah, so, it's taking these losses. This is drawdown control, fully automated drawdown control. When things are getting a little bit too squeezy, we start getting out. Otherwise, we just keep banking. That's the beauty of it. It just does it for you. So, Aussie New Zealand, fundamentals short, technicals buy. Aussie New Zealand. Yeah, Aussie New Zealand's a sell at the moment. So yeah, I mean, from a fundamental, this is what I'm looking for here. I'm looking for this area to buy it. Reason being, and that's trading obviously against the trend, etc. But that's a mean reversion trade. I'm looking for a pullback on this strong move that we've had down, something like this. An ADR move to the upside, basically. So for me, what this will be is, as we are extended down here, it will be elastic band theory, absolutely stretched down here massively. So I'm just looking for a quick snap. I'm not looking to get in long on this to hold it. I'm looking for a quick snap pullback, counter trend, mean reversion trade. It's risky because I think what we're doing is long term, we are just starting that second leg. But that second leg is going to be formed like that, the same way as the up leg was formed like that. So as long as that happens, yeah, we're going to get that. That's what I'm trading. I'm trading the profit take on the drop. So yes, it is counter. But again, it's up to you. If every trade is different. If you want to be super safe, only take sells. So what you would have to do if you want to be super safe is you will take a short out of here, or a shorter ADR high, or a shorter RSI high extension. So you will only take shorts when that occurs. So you could take a short out of there, yesterday's high sweep. You could take a short out of that propulsion gap, which has already been tested once, or you could take an ADR high. So you get in when I get. So basically, I get in, I get out, you get in. Yeah, this is the dangerous trade. That's the safe trade. You can trade both, obviously, but up to you. I can't answer that one, Cam. Your choice. But it is extended. Obviously, we've had an RSI extension on that now. Look. So RSI is extended now on Aussie New Zealand. And we've got pound odd as well, which is also extended now to the upside on the hourly. That is a nice looking short. Not quite, but again, if we're going to hold this reversal alert, which is a lovely end pattern, that one, and come back down into this propulsion, it makes sense to come and take that liquidity, doesn't it, really, before we do that? What's the sentiment on it? It's a long at the moment. So the market is short at the moment. Hence, obviously, it's going long. So at the moment, I would say probably the best way to take this one would be we're extended on the hourly RSI, wait for an ADR hit today. So if you've got the ADR dashboard, obviously just wait for an ADR hit to the upside and then short it. Richie Rocket, the standard is the best. Oh, on that thing, yeah, this thing. No, not that one. We were looking at the nights that go neap. What they? I can't remember what they're called. Anyway, yeah, but no, not for me. The thing is, there's so many prop firms out there, right? And they all are very, 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 very similar. For me, I only need one, and DAX. I'm possibly going to stop out with a small loss. So the trailer's kicked in on this, so I've only got a small loss on it. That was the original loss up there somewhere. So tiny loss potentially, but you only need one prop firm. So pick one that you like and stick with it. If you're happy with them, with whatever firm, stick with them. I like my Forex funds because they are the cheapest 5-day evaluation. Yeah. And I like E8 because they are, although more expensive than my Forex funds, they are the fastest way of getting funded. So those are the two things I'm looking for. I don't want to wait forever. When I need money, I need now. And I want, if I'm going to trade with a normal longer term account, I want to buy it as cheap as possible. Same as anything, isn't it? If you want to buy anything, you go to Amazon. Why? Because they got the cheapest price. Because they are basically a massive price comparison. Everybody that sells on Amazon is selling the same product. The person in the buy box is the cheapest. It's the same with the prop firms. Yes, there's hundreds of them out there. And we're looking at this one today, weren't we? Yeah, absolutely. They look great. Nothing wrong with them. Can't fault them. However, for a 100K account, they're more expensive than my Forex funds. So why would I trade with them when I can trade with these and buy it cheaper? It's the same thing, isn't it? I'm getting funding of $100,000. Where I get it from, I couldn't give a monkeys. Apart from if they've got 8cap as a broker. That's the only thing I would say no. Which is what I don't know. So the only way I'm going to find out is I'm going to try them. So I'll just get a quick 10K for $90, 90 euros today, and I'll give them a bash. And see what it's like. And I can report back then. I'll do that in a minute. Thanks Dion, for the okay, makes sense. What's wrong with 8cap and how can you tell who is using them? Right, so 8cap as a broker are awful for market execution. So when you hit the buy and sell button, right? When I do this, I'm in. When you do that on 8cap, you go 1, 2, 3, bang, and you're executed. When I move my stop loss, I go like that. Oh, hang on. I go like that. Yeah, on 8cap, when I go like that, it goes 1, 2, 3, 4, 5, bang, and then it moves my stop loss. If I'm scalping on M5, yeah, and I've just seen that sort of price action and I want to go short, I don't want to hit the button there and get in there because my risk that I was placing there is now that much instead of that much. You can't trade with it. Their market execution is too slow. Their spreads are too high and they're just awful. So go and look at the broker website and normally they will say who their liquidity provider is. And they usually have the logo all over the website. So just steer clear of ones that are Funded Trading Plus, I think, is one. Steer clear of ones that use 8cap. There you go. Bang. No, thanks. Just don't use them. And again, they're all the same, look. Experienced trader, 100K, $499. Same price as my Forex funds. Yeah. Why wouldn't I use them? Because they only give me 1 to 30 leverage. Yeah. My daily drawdown is 3%. I get 5% with my Forex funds. Why would I pay the same price for the same product with a crappy broker to get 2/3 of the available drawdown? There's absolutely no reason to use this company over this company. They're the same thing, except these guys don't give you such a favorable term. So don't use them. That's why I use these guys. Best out there for my needs. So shop around though. There's a lot of them. Look at my list. Prop firms. There's a lot of them about. I've traded with most of them. DAX is just the arm on. Sorry about that. Well, that's disappointing. DAX pulled up and hit your break even. What happened? How many times have I said it in here? If you use a break even stop, you will get broken even. If you don't use a break even stop, they won't break even you. They're nasty. Sorry, I'm just being annoying. Noriet, thank you for sharing Helpy. Oh, God. Is that bloke again? Look. Thank you for sharing Helpy FX signals last day. I Googled it. Their group is free. Thank you again. Made some profits. Who is Helpy FX? Come on, let's Google them. This spam bot's been in here a few days now. Helpy FX signals. Oh dear. Web root, caution. I can't believe I'm going to this website. Join their VIP signal group. Right, here we go. Who is? Right, so they claim that they've got 27,000 pips in 2019. Website was only registered in 2022. Scam. How can you possibly have 27,000 pips profit in 2019 when you only started your website in August 2022? Sorry, you didn't even start your website. You actually registered your domain name. It was updated in August, so they actually just went straight into hosting somewhere in France. Scam. How much is the scam? "10 years in service." You haven't been in service 10 years. You're lying. It's all lies. Always go to who is for anything you see to do with trading. It's all a load of crap. 85% accuracy? Yeah, right. Show me someone with 85% accuracy and I will call bullshit every time. Signal accuracy up to 95%. Right, so 1% is up to 95%, isn't it? Don't fall for this bollocks. It's just all bollocks. I'm tempted to join just to go and spam their Telegram group, but it's probably going to cost me $200 or something. Yep, there we go. I know, I can join with 1 month access to join their Telegram group. Free fixed take profits. These are the groups, yeah. There's when you join these groups, they post their signals in the groups, right? And I've done this, and I've called these guys out before. They post their signals in the group, in the Telegram group, right? They take the trade, or well, you take the trade, or all of a sudden they'll go, TP hit. And you'll be like, what? It's nowhere near the TP. You go and look at the signal and it's like, oh, it did hit TP. They change the bloody entry prices and the signals. They change everything on the signals. You have to take a screenshot of it to verify that actually, no, when you got in, it was different. They're all scams. The Telegram groups should get shut down as well, and they move from different Telegram groups to different Telegram groups so that all the people that have been scammed aren't in the Telegram group anymore and can't neg them. It's all a load of bollocks. It really is. Anyway, you can't stop them spamming YouTube channels because they were called something else yesterday, weren't they? It wasn't Noriet Blanche yesterday, which was someone else. Which broker do my Forex funds use? They use, it's called Traders Global Group. These guys. I think it's actually, I think my Forex funds, it's they've got their own liquidity route. I think Traders is actually their own broker. But it's basically just direct access to the market. So it's fast. That's all you need. The ones that are using third party, and just close that cell. The ones that are using third party brokers like 8cap, they are the kind of budget prop firms, if you like. I would say. I'm not biased. I am biased towards my Forex funds, but I'm only biased to them because I've used them all. I've taken evaluations with so many firms, and I always come back to my Forex funds and EA because, as far as I'm concerned, the only thing I'm interested in is what's the targets, a realistic amount of days, and a decent amount of drawdown allowance. That's all I'm interested in. And the price. As long as you can provide me with easy past stage 1 and 2, not having to wait 3 months to get there, and you're going to charge me a reasonable fee for it, that's all I need. Why bother with everybody else? It just doesn't make sense, does it? How do we know that all the prop firms aren't just making us use demo? Do you care? Does it matter? What does it matter if you're trading on demo and they're not actually taking those trades? Doesn't matter, does it? It's irrelevant. They pay you. I get paid. Whether I made that $5,800 or $5,500 I've made in the last 2 days, do I care whether or not they copied those trades? No. I'm going to get paid 80% of that. Not bothered. It's up to you. And that $5,500 I get paid will be made up of 10 evaluations that have failed. Yeah. So for every 10 evaluations that fail, they can pay me. That's the business model for most prop firms out there. Most prop firms, you never actually trade live capital. FTMO you do, and my Forex funds I know you do as well. But you don't always do it as soon as you pass, because they need to see that you're a decent trader. They need to see you trade and make a profit. And they will lose money on some of the trades. You know, when I blow an account, if they are copying me, they're losing money, aren't they? But it's a small risk. It's a very small risk. When you've got 7,000 traders all trading on a portfolio, you will build up an overview of a P&L in exactly the same way as a broker does. When a broker takes the other side of your trade, when you're on their B book as a broker, when they take the other side of your trades, if they see you winning, they will move you over to the A book and they will stop taking the other sides of your trades and they will pass you out for execution to the market and just take a commission and spread off of you. And it's the same with my Forex funds. If you passed on my Forex funds valuation and then continuously made money over a period of 2 months, they're going to start copying your trades. Yeah. So you shift from a B book to an A book. It's exactly what the brokers do. Every time you go into a broker, you know, this is how the market works for those that don't know. Yeah, if you look at any broker, UK regulated, yeah, they publish this on the website, yeah. CFDs are complex, blah, 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 blah. 82.7% of retail investor accounts lose money when trading, right? So if you know that as a fact, 82% of retail traders lose money when they are trading, and you are a broker and someone deposits $1,000 into an account right now with you as a broker, what is going to happen? 827 of those dollars, you know, are going to get lost because you have this statistic that is what happens. Just making it as an average. So if I go long in the market right now, what's going to happen? There's an 82% chance I'm going to be wrong. Put it that way, right? So what your broker does is they take the opposite side of your trade. They fill your entry for you because you're going to lose that account. The statistics within brokerage are that 60% of traders lose 60% of their account within 60 days. It's the 60-60-60 rule, right? The rest of them lose it faster. Yeah, there's videos on this by brokers explaining how their industries work. There's software providers out there calling us Muppets. I've shown these videos before. There's videos out there for the guys that make brokerage software at a convention, and the guy's up on stage going, right, this is how we catch the Muppets. And they can see every trade you've got, every account you've got, every stop loss you've got. They can manufacture everything to make you lose money in a broker if you use a stop loss. But when you start turning that 1,000 into 1,100, 1,200, 1,500, 1,800, they start going, crap, we just lost $800 on this bloke. Right, stick him in the A book. So all we do now is we take a commission every time you press the buy and the sell button, and we take the spread. Because we give you that price, and we execute the order at that price with the dark pool, the ECN, wherever we're going with your order. Yeah, that's how brokerages work. That's why 82.7% of retail traders lose money. Partly because they haven't got a clue what they're doing. Secondly, because they're using a stop loss. And thirdly, because they can be spread by the broker to make a loss. And they do it all the time. Why do you think you get these massive candles on the New Zealand dollars? It's going to prove me wrong, isn't it? We didn't get one last night. Yeah? The market didn't do this at all. The broker did this. It closed there, they opened there, they spread the market down to there. Why? Because everybody's liquidity was sitting there. So what did they do? They took price down there, they stole everybody's money, and then they moved price back to where it was. That's what brokers do. It's their job. Broker software, yeah, if you look at broker software in a brokerage, what it will be is a list like this of accounts. I'm in there, you're in there, we're all in there with every broker, right? And it shows your margin, yeah, and it's got two really important columns, yeah, and these columns are prices. So let's say 58107 and 58094, okay? If an order gets executed at these levels, this account will lose. We will make money. When the price gets close to these levels, they can spread it to incorporate those levels. And that's why you get stopped out and price moves away in the opposite direction. I've shown it in here many times where I have had a stop loss here, yeah, and an order execution there, and price has done that. I've got executed up here at the open of the market of the day because they spread it by 35 pips to just basically sweep all the cash out of the market and stop everybody out and make you lose. Yeah. Prop firms do the same thing. It's all the same. Yeah, no difference there at all, which is why I say my Forex funds and Traders Global Group are actually the same entity. Their broker, it's in their interest to stop you out, isn't it? If they're not taking your trades. Just be careful, yeah? I mean, you have to understand what you're in here. You are in a money-making machine run by the banks. The brokerages are only interested in one thing: commissions, spreads, and B-book accounts. They spend 45% of their profits on acquisition of customers. Why? Because 85% of their customers blow their accounts every month and stop. So what if you think of it as a business, if you're a broker, yeah, you pick up 100 clients, you know for a fact that 82 of those are not going to be here next month. What have you got to do? Go and find another 82 bloody people to put into your firm. Yeah, and you have to do that every month. So if you make 100 grand a month, you're going to have to spend 45 grand on Facebook getting some new bods in, because otherwise you've got no money. That's the reality of trading. Tell it like it is. It's just how it is. Anyway, I've two my Forex funds. Which broker do I've got two my Forex fund challenges this month. Manual trading. You've failed two. Yeah. So if you're failing manual trading, it's just you will fail. I fail. Everybody fails. It's all to do with when you start your evaluation and how lucky you are with the trades that you get into. Yeah. Look at the DAX. today and look at the NASDAQ yesterday. Yeah. Oops. I was on that yesterday and made $3 grand. I'm on this today and I'm probably in $400 of profit with a break-even stop. Yeah. That's the difference between passing an evaluation, and that's the difference between not getting anywhere and having to do another trade this afternoon. Yeah. It's all to do with timing. You can't time the market. The market moves when the market moves. Whether you pass or fail an evaluation is dependent on which trades you take and what happens to those trades. And it's all out of your control. You're on a moving train at 100 miles an hour when you press the buy or sell button, and you've got no idea whether the train is going to stop at your station or the other station. You just got to accept it and just take another evaluation and do it all again. However, if your strategy's crap, obviously, it's never going to work. But if you use an EA with a proven strategy, as I say, like the Market Reversal Alerts EA with very small trades, then it's all automated. You can't cock it up. People cock up trading. How many times, if you've been on a proper valuation, have you been 3% in drawdown in a day? Yeah. And gone, oh, screw it. I'm going to go 2% on the next trade. I'm either going to blow it or I'm going to pass it. That's a human being doing that. An EA would never contemplate doing something like that. If you put your evaluation in the hands of the ORB EA, for example, yesterday, well done, you've done half your target. But if you don't touch it, you'll get on it. I got out of this trade here. Yeah, I rode that whole thing. Thank God I wasn't looking at it, because if I was looking at it at that point when it was in $2,000 of profit, I probably would have shut it. But I didn't. And it came back to probably $4,000 in profit before it came back and took my trailer out at 3.5. In the same way as this is trailing now. Automated stops you making stupid mistakes, which is why I built the EAs, because it means I'm not involved, isn't it? How do you know all the prop firms aren't just making... So yeah, I've sort of answered that one, haven't I? You say, I know they do, that MFF allow you to trade for real, but where is the evidence? I don't have any evidence. I just go on what they say. They have published the fact that they do not trade. A lot of prop firms do this. They've published it somewhere in their blog. If you go and have a look in their blog, it might even be in their FAQ. There you go. All of our traders start on demo, simulated. Every month we add your profits from the demo account live, maximum 3.5% initial balance. Once our live account reaches 10% initial, If you have a 100K account, it doesn't say in there. I think it's on their blog, but they publish openly saying we do not trade. When you get your funded account, you are on a demo account. It's still a demo account. All prop firms put you on a demo account, but what they do is they reserve the right to copy your trades. Yeah. So think about how how businesses work, how crowdfunding and crowdsourcing works. Yeah. If you get 1,000 traders and you give them all the same challenge, and 150 of them pass the challenge, yeah, and then when you give them a live account, 25 of them are left after a month, yeah, what you can do is use all the money from those 850 that failed to pay the ones that stopped and got a payout on the live accounts. Yeah, and you'll still have a shed load of cash left over because they won't have made all that money that you made out of that. You've made 4.9 million. So, you got 25 left at the end of the day in the pool, right? These guys, you then run an algorithm to say, if we had basically run a back test. You run a back test to say, if we had taken all of these trades, what would the P&L have been? Run the back test on all 150 that passed. What would the outcome have been? If it's a positive outcome, you will then use a percentage risk of your portfolio of 25 million on these guys. Some of them are going to fall by the wayside, and you're going to have 17 of them, for example, left after month 2. By the time you get to month 3, you'll have about 6 or 7 of them left because the other guys will have blown their accounts. But the ones that have made the money will outweigh the ones that have blown it, and those are the ones they fund. But the first stage of having an account, they openly say they reserve the right to copy your trades. They don't say they give you a live account. FTMO are the same. They do not say they give you a live account. Most of the firms out there will never even have a live. There's no such thing as a live account. They reserve the right to copy you. But think about what they're doing. It's an amazing way of evaluating a huge range of traders. They want good traders to run their portfolios and help make the money in the same way as DarwinX works. If you know about DarwinX as a broker, it's a broker that I use as well. DarwinX have a system called Darwin's, and these are basically traders' accounts. Yeah, I'm in here with one of these, and you see you've got investors' capital here. Yeah, so what these are accounts that are being traded by regular traders like you, me, and other firms that are trading. What they do is they crowdsource these and they find the ones that are profitable over periods of time, and they take capital to invest in them. But look at the returns. Yeah. There's no crazy 16% returns and 8% returns a week. These are proper, like me making 10% a month on my account. That's realistic. I don't make that on my Darwin because my Darwin's got a lower risk. I don't make anywhere near that. But they score you basically. Look, so everybody gets a score, and that's exactly what people like MFF are doing. Is they are crowdsourcing traders to find ones which are good, so they can invest in them. And they have investors which put up the capital. But you're only ever, if you think about it, every single trader that you say here's 200 grand, your risk is only ever 5%. My Forex fund's risk is only ever 5% on a day, or 10% on an account. So the worst case scenario in a 100 grand account, the worst case scenario is they're going to lose 10 grand if they were to copy every single trade. However, if you've proven yourself over a month and you've done 2 evaluations using the same strategy, and the algorithm says risk profile's the same on stage 1 as stage 2 and on live, then that risk profile, if it's all profitable, they will put money into it. Of course they will. If I had everybody in this live room now, I don't know how many are in it, I haven't got a clue, but if you all now showed me your P&Ls, right, and I looked at them all, I'd rank them. And I would rank them on consistency over time. And that's what they're doing. My Forex funds, they're crowdsourcing traders over time, and the ones that come out at the end of the funnel with decent profit. If I make 5 grand, right, on 2 trades and then don't trade for a week and extract that money, do you think I'm a good investment for them? No. How do they know if that's lucky or not? Because I've only taken a couple of trades. That's not how it works. It's just a big money-making machine. The whole industry is a big money-making machine. And we're just basically the coins that they slot in. And you need to know how to play the machine. Yeah, the stop-loss machine. You know, this is why my whole bootcamp revolves around. Do not use this thing. If, like Diamonds just said today, oh, that's disappointing. The DAX pulled up and hit my break-even. Why did it hit his break-even? Because he put an order there to say get out the market. So what did it do? It came up and it got him out the market. If you don't put the order in the market, you won't get out the market and you'll just be in profit all the time. We all do it, don't we? I'm not saying Diamond's bad, wrong, or right to do that. He's protected his capital, which is good. And you should do. And I protected my capital now, look. But, you know, that's how the market works. We're all taught to put a stop loss in place to stop the loss. What the stop loss is actually doing is losing us money. Stop using a stop loss and you start to get results, whoops, that look more like this. Yeah, that look more like this. You're going to have losses in there. I still lose money, right? But what I don't do is put a stop in every time to say, take it now. Because they will, every stop. And that's the whole premise of what I have on the website. Yeah, all of this on the website here. Retail sentiment. This is telling me where all the liquidity is. Yeah, on the US dollar CAD at the moment, all of the liquidity is at the upside. All the stop losses are up the upside resistance. They're all there. I know they are because everybody's short. What does that mean? They've put a stop loss up there. If the market needs to come and get liquidity, where's it going to go? Up. So what should you be doing on US dollar CAD? Buying it, because everybody else is selling it. Whoops. Yeah, they're selling it. So buy it, because the liquidity's here. Because the stops are there. And if you don't use that stupid thing that is basically an order, think about it. And I'm going back basically into what we've covered all week, haven't we? I've been saying this sort of stuff all week, but you would never go into a job, right? Any other job or career or anything that you do and say, I'm going to purposely put this here because I know it's going to lose me money. It sounds ludicrous when you say it, but that's exactly what you do every time you use a stop. You basically go, short, can you just take my money when you get there? All right, then. And then it goes down here, and you're like, well, I was right. Well, of course you were, but you put an order in to tell them to take your money away. Why are you surprised? Remove that, and if they do that and then that, you just take the money and run. It's craziness. But that's how the whole brokerage system, how the whole prop system, how the whole industry works. It works on limit orders, pending orders, stop orders. The whole market moves in market structure for one reason. It's formed by taking liquidity out of the market. Why did that double bottom not hit that level and bounce? Why did it go down that much? Because everybody that pressed the long button there put a stop loss here. So what did it do? It took those stops. And then it moved away to where? The place they put their stops. There. So right now in this market, at this second, there is a shed load of cash there and a shed load of cash there. What do you think is going to happen over the next 48 hours? Yeah. If you don't use that and that, what can you not do? Lose money. And what will the market do? Move up and down. So what do you want it to do if you're short now? Move down. So just wait. When it moves down, get out. It's very simple. Very, very simple. The whole thing's covered in the bootcamp. But we don't do it. We're taught not to do it. We're taught by the brokers. The brokers make the courses. All of the course people are affiliates for brokers. And they send you to brokers because the brokers need your money because you put the stop in the place. If you go and use Forex, I've got a link on here, and this is an affiliate link. I don't care. It's telling people I earn nothing, pretty much. Really good at that, virtually nothing. But if you go and join Forex now, basically, and you position trade with them, they will be pissed off, and I won't earn any money because I only earn a percentage of losses, same way as they do. No one loses if you do it. If you do the position trading, Anyway. There you go. There's an explanation of how the market works and the real world that we're living in and we're trading in. So that's just now broken down. Target today is there, which is the gap fill from yesterday. So it's doing the gap fill. Quite a big, strong push down here. So we're likely to get a little bit of a pullback. So we are just taking liquidity at the moment from, as I just said, from yesterday. So we're going to find limit orders triggering here, stops triggering here. So the sell stops on all the buy orders will trigger. And as soon as those sell stops are triggered, we'll likely get all the pendings overpower and push back up. So that's the limit orders triggering at the same level. So you are either one of two things, aren't you? You are either a mean reversion trader or a breakout trader. In that case, you will either have a pending buy or you have a sell order there. That's why it's heading to this level, because that's where the orders are. It needs money. So when it gets there, we're either going to get a pullback and then hopefully a break back down and probably flush in one or two candles back down to there and fill that gap. As soon as that gap's filled, we'll probably pull back for this afternoon. But that's the play. But it could obviously just bounce and come straight back up range bound. That's what we are at the moment. So your decision is, am I range trading or am I breakout trading? One or the other. Either way, I'm making money on this one, but I made a loss on the first one. So negative day today, unless we get down to here. In fact, I'm just going to adjust my stop to the gap, my TP to the gap. Jesus, where's my TP? Oh, I'm not using a TP, am I? Of course I'm not. So that's $1,000 there. So I'm just going to go for that gap fill today. Hopefully we reach that. If we don't, we don't. Right, that's all I've got for you today. Anybody needs anything coming to the Telegram group, I will be in there. I'll be back this afternoon for the DAX, Dow, not the DAX, the Dow, the NASDAQ, etc. For the New York session, 220. Be aware of the news. We got at 130, PCE at 130, so we need to be watching that. Potentially, we're going to get some movement on the US dollar and therefore also on the indexes. So just beware. If you've got any US dollar in profit, if you're longing US dollar, I'd probably just cover it maybe, or just take some off, bank it, whatever you want to do. But I suspect we might not get a massive move off of this. If it's as expected, I think what we'll probably see is just slow weakness in the dollar. So just a little bit of a pull down, but hopefully they'll take that liquidity first, yeah? And then entice more shorts in. Okay. Anything you need, I'll be in the Telegram group. Otherwise, I'll be back at 2:20 and obviously back on Monday at 7:50, same time for the London Frankfurt session. But yeah, hopefully see you this afternoon and we'll see if we can milk the NASDAQ again. All right, have a good one and see you later.